Good morning, Uncle Stacy. Good morning, Lecker. Good morning, Roach. Good morning, John or JB, whichever one you prefer. Good morning. Good morning. So today is Wednesday, December 14th, 9:08 a.m. Eastern Time, and we are about what would we say? About a half a day away from Powell coming to the market and deciding whether upon to be less aggressive, more aggressive, or stay the same. And that's kind of what we'll figure out today. So the first thing that we want to do, as always, since we are always zoomed in intradays, we want to zoom out. So on the monthly, relatively no change here. Not really that I see. We're one time framing to the upside. We've since kind of pulled back off that high. We're inside the previous month's range. And so the target here really becomes that 40.95. Getting back above that 40.95 would really kind of give the market the energy that it needs and then give the confidence that it needs as well to maybe break this trend and look to head up to that 20 monthly moving average sitting up there at 42.39. Pop, good morning. Switching over to the weekly here, we can kind of see that rejection yesterday. This kind of looks like a little bit of a rejection candle, even though it is an up candle. Um, Actually, I don't know what's going on here. Is it on the 20? Oh, it's the weekly. That's why I'm confused. Okay, so on the weekly, I was like, I thought it was the daily bar for a second. I was like, that doesn't look right. Okay, so on the weekly, we see that kind of break of trend, but really it pulls back into trend. So we want to see it kind of, you know, get above that. And what we're kind of looking at before this move up yesterday, and I wanted to bring this up as I kind of saw it because we saw it here before. We kind of have like this little 2 week balance, right? We get this look above, it doesn't hold, right? The next week opens up and just trades straight to the bottom of the week. Okay. And so now this week opens up and we had traded straight to the bottom of the week and then bounced. This week opens up, trades above, but now has since come back into that same balance. These 2 weeks here, it's basically right at that high. So this 40.50 is going to become a very key significant level as the market really needs to try to hold above that today. Our settles right around here from the daily bar, but needs to hold above that today if it wants to get any kind of continuation to the upside or any kind of non-sell off before Powell or leading into Powell, which is what we might see today. We might see a bit more selling as we saw kind of a weak retracement move of yesterday. But so far, really, we're just back inside the previous week's range, and that's what we have to kind of monitor as the week progresses. Even with Powell today, we still have to remember we do have a expiration and a OPEX on Friday, which may move the market fairly significantly. So, um, we definitely don't want to lose sight of that. Switching over to the daily, and here's kind of where, and for this, I want to show you the SPX and kind of my train of thought here. So yesterday we would say was kind of a down-ish day, right? Um, but one of the reasons I removed the colors, not only because I've read that psychologically it might make it easier to kind of decipher what's going on, but also because it gets you out of the mindset of certain things like this. Like, yeah, maybe this trend isn't perfect, okay? Maybe it's not perfect. They're not always perfect. But this day yesterday is looking like a big down day, right? But we were in a 1, 2, 3, 4, 5 day balance, and then the market moved higher. Value was higher. When we look at the profile, it'll be clearer to see. We came up to that 200 and just kind of settled on the 200, right? Um, this is kind of a key thing here, I think, because it's more or less of a distraction than anything. A lot of people that are traders saw the market come down 4% yesterday, and then here we are back on the 24-hour futures chart, and we saw this kind of huge retracement, um, and back into this this gigantic balance here. But we're above the 200 on the futures, and so if the market just holds where it's at today, I think there's good odds that we probably trade this high. And my reason being is because not only are we still one time framing up 1, 2, 3, 4, 5 days in a row, 6 days in a row so far today until we break this low. And if we break this low, it becomes a lot different of a story. So if we break really below 4,000, I mean, my perspective is it to come down to the low of balance or maybe even to this gap. But as long as we stay inside the previous day's range, I think because this high here is very similar to this high here, very mechanical level, it would make sense if I was a longer term seller looking for this kind of next swing low look, right? Yeah, you had that seller here, but you didn't really get a lot of opportunity. The market opened up and sold down right away, so it got liquidated pretty fast. If I was going to sell another swing low, and I'm not, but if I was, I would wait for the market, let the market come back up to you, get an opportunity to sell it again here, and then hammer it down, right? Um, and into this gap would be the target for the day. But that's just me. And this high is very mechanical, very close to this high. Um, if we look, that's what I wanted to look on was the SPX and see how close the highs are on the cash chart. You can see, yeah, even here on the SPX, you've got the 12-1 high was at 4151, 4151. This high here, 4196. So, I mean, a quarter or 2 quarters away from each other here, 2 ticks away from each other. And then this high over here, 4119. I mean, so not as close as it is on the futures chart, but still relatively the same spot. So what's interesting is that we have this gap. So this is where that island top reversal was at. Let me know if we're getting close on time. I don't want to run out of time before the open. But this is where that kind of island top reversal is at. We got that sell off. Well, the market put that gap in, rallied a little bit, had kind of a weak spot here, back tested it, and then we've just been holding this gap on the SPX for a while now, and it seems like there's just been kind of a buyer lurking below. So really, those are kind of like my only really scenarios that I kind of assume is like, is there a pullback first before a retest, and then we'll see what the major reaction is here, or can they not even get anything going, or they just get out of the way and just let it come back up here, because that's where the gap is from the previous swing high. So we can assume this is where that seller is at, and that's what I'm saying with the SPX. Why I think there may be some more room to the upside is it wouldn't make sense for this seller to not just wait patiently here and sell from that 4200. And if we zoom out, oh shit, what happened? If we zoom out here, it's only giving us a year of time. We need a little bit more. You can see this is that Fibonacci from the COVID low on the SPX to the all-time high, retracement down to 50%. What a fucking shock. Like I said, I really think that's how simple it is. But now we're back above this 200, and if we look back in time, a lot of times when we've crossed below that 200 and then came above it, it just becomes, support. So we'll kind of see today how that acts. And I think maybe a lot of it's going to depend on what Powell says and all that jazz, but we will see. Now, jumping onto the profile, overnight inventory is fairly balanced, not really moving anywhere, where price is trading basically right at the settle right now. But you can see yesterday, right? We have the Globex sessions on here, but if we exclude the Globex session profiles, you have a 4-day balance here. You have a move higher, right? We end on the spike, so there's the move out of balance. Prices never get back into the spike, and that's letting us assume that these higher prices have been accepted, right? And then, I know yesterday we had the big sell off, right? But today, the key is to monitor for continuation. So we don't want to open up like, oh, fuck, we're going to sell back in. It's going to go down, blah, blah, blah. We have to open up understanding that we're opening up inside yesterday's range, inside yesterday's value. And in the reality is until 2 o'clock today when Powell decides to either shit the bed or, you know, be like Santa's here, most people are going to be very cautious and not really holding positions long term. I think, but we'll see. The opens in 20 minutes or 10 minutes. So morning, Dan. I gotta start watching these. Yeah, that's pretty much it. You see the VIX is at 22 half. TNX has climbed up a little bit. It's up at 35, still below the 40. The dollar's still coming down at 103.92. That's nice. Uh, Gold doesn't really matter. Bonds are pretty much flat. Everything's opening up pretty much flat this morning for the most part. We get here. And Nasdaq looks like a pretty tight range as well. Hey, what's up? Uh, I'm
until we
I'm
get some news to move it.
I'm hoping for it, to be honest.
Yeah, because that's what I'm looking at right now. When I was trying to figure it out, it's like I don't want to get stuck trying to long up there on the overnight high or shorting down at the lows unless it gets accepted below.
Yeah, I agree 100%. Until Powell comes out, I don't think there'll be a definitive move, to be honest with you.
Yeah, and I'll be watching the World Cup at that time. So
Is it the final game today? No.
the last semifinal, France and Morocco today.
Damn, I wonder if Morocco can do it. That'd be crazy.
Yeah, it would be, but I'm kind of curious. I'm excited to see an Argentina France final. I'd like to see Mbappe and Messi go after it one time. See an Argentina.
Yeah, Messi put on a show last night.
Yeah, I was excited. I told my dad, I was like, "You need to watch this. Something's gonna special is gonna happen." He showed up, so I didn't look like an idiot.
He's like 41, right?
No, he's like 35.
Oh, 35 still, I mean, that's still pretty good to be playing with. A lot of these kids are coming into the pros now at like 18,
Yeah,
even younger sometimes in Europe.
yeah. Mbappe was 19 at the last World Cup, and
Yeah.
he took it over.
A couple years ago, maybe back like 2016, Mexico had a 16-year-old kid on the team.
I mean, they're saying this is Messi's fifth World Cup. If he's like 36 years old, how old was he when his first one?
Yeah.
It's got to be something around that.
Live for love. Good morning, JD Clark. Good night. Thomas. Good morning. Clipper. Good morning. Yeah, let's take a peek at Bitcoin real quick um before we get started. What the fuck's happening here? BTC USD. Oh, I'm on. That's why. So Bitcoin did the opposite kind of the market yesterday. Well, not really the opposite because it didn't really go down at all when the market was going up, but it basically has just been balancing for the most part. And you can see that low, that 15,000. That's what we talked about either yesterday or Monday, where I was saying that might be like a low for a while, depending upon how the Powell meeting goes. Um, and we're kind of getting back up into our levels. I'd really like to see, for me, I'd like to see a little bit of this, like to get acceptance above this balance. Because any kind of like, big move that just kind of rallies straight up to the upside, even though crypto's kind of crazy and we do have single prints up here, um, probably will just be retraced. You know what I mean? So it's kind of like, it's nice if you catch the trade, but if you're looking for to buy like a investment piece or something like that, it's kind of annoying because then you're like, oh, I'm up, oh, I'm back to normal. It's like that's just annoying. Um, but really, I mean, that's kind of the thing. I'd like to see us kind of balance here, and you kind of see this previous balance before that breakdown, and that's right where those single prints are at. So all of these people that were probably long, this is probably where they capitulated. So we can expect to see some some buying back here because a lot of people probably got stuck. A lot of people probably got stuck here. So it would make sense to kind of balance there before heading up to that 20,000. But as long as Powell, I think as long as Powell is gentle with the market, then the upside is. And I don't think it's going to be like just like some power, move or anything. Um, I think the market just won't make a new low in the year, right? So I'm not ruling out that this like not yesterday's low is not the low, right? But if Powell's gentle with the market, then we could see some cooling in the selling because depending upon his tone, people are going to be less willing to get short, especially long-term money. All right. You think long-term outlook Powell's going to crush the market more than Dr. VJ? Yeah, so I'm kind of thinking this. I'm kind of thinking that Powell comes out and he says exactly the same thing that he always says, and nothing really changes, and the market just gets volatile, but then eventually just kind of drifts back up to the upside. That's a scenario where if he says the same shit different day, we just keep drifting. He could say that he's going to keep clapping the market, um, and then everything will be focused on what CPI says on the next month. If it continues to move lower, then Powell will be kind of forced into cooling off, and it will also be focused on what is the terminal rate or what is the target rate for Fed funds. And so if it's 5 and we see because we're going to see the dot plot at 2 before the speech today, if we get to see that dot plot before it comes out, then we will have a little bit more information. So if it comes out and it's going to start cooling quick, then we know that they're going to be a little bit less restrictive and we can expect some more risk to come back in the market. And that's going to give us an opportunity to kind of pre-position before Powell starts answering questions, maybe with some options or something. There's going to be big volatility Friday because there's a big options expiration on Friday. So there's some opportunity to, I think, to take some low cost, high return, medium probability trades. Got 2 minutes until the market opens up. Actually, like 1 minute. So you can see some money starting to flow into the market right now, right as it's about to open. All the big dogs firing the computer on. The VWAP is very flat. We're pretty much right underneath of it. All right, there's our open. Power's right up, right off the open. Right up to the VWAP, we get some selling. Nasdaq's a little bit weaker here. Right as I say that, Nasdaq pops. So we're getting a little bit of a pop here. Let's see if they get sustained continuation. They're selling right on the VWAP, but it looks like they're lifting the offer up. We should see a nice little pop. Failure right at the VWAP still. Big struggle here. Nasdaq's pulling back a little bit. But Nasdaq basically pulled right up to its VWAP and just could not hold. Oh, oh okay. All right, so market pulled back, couldn't break the open. We get a nice little Paparuski here. We're continuing up. Little short covering there. See, the nicey breath is still red, but starting to turn green. It's back to 1-1 here. 7 and 8 counts are coming in. Little bit of profit taking right there. Look how light the volume is today, guys. Look at that. 2,000 contracts is the VPOC here. All right, we're getting volume above profit taking. We know what that means. Weak spot right here is 59.5. So if you're still long, you put your stop 59.25. Hopefully you added right there for that pop. Remember, weak spot is 59.25. That's where they're going to try to flush this thing down to. If the sellers can get a grip, and they're trying right here on the 63, see a little bit of offering coming in on the 63, and they're actually getting some momentum there. Their target here is 59.5. And there's a bid stepping up. Yeah, that bid keeps stepping up. That's interesting. Nasdaq's on the up and up here. So you can see like just this little baby double distribution going on. The tick is basically doing nothing. It did come up above that zero level, but most of our sectors are green here, and our weighted AV is green. It's kind of tough here to fight the market on this way up until, like we talked about, what Peter brought up. I mean, there's single prints here, so that may be a little bit of an area that we look to see some more covering, and then more single prints up here as well. But basically, kind of just fading the edges, and so right now, I think your first fade opportunity is going to be that Globex high, which is, or well, Globex excess, I guess, which is right in that distribution from yesterday. And I didn't mark the single prints. We have the screen space, and so it's just like, it just becomes, I mean, a kind of a pain in the ass. I could do it with a line. That's a little bit easier. I think when we mark it with like a area, it just becomes too cluttered. The screen does. What should we call it? Singles? There we go. And so what we'll do here, right, is this is tough. You could move your stop up real tight here to like 64, but you might get back ticked before the next move up, or this might be the high. We're seeing a little bit of tapering off this high. We're still seeing these bids step up. So it's tough. You might want to be a little bit tight here. So as we come into this area where where this distribution is from yesterday, the key thing to pay attention to is the reaction. If we trade all the way to the opposite side right away, then we can assume that there wasn't that many longs trapped up here, and that old business is taken care of, and we really don't have to get out of the long. We could just keep riding it up. If we do see reaction, which right there we see a little bit of selling, we can assume there is still some longs trapped up there, and you know, probably a decent spot to be taking a little bit of profit here. If you know, if you so fancy. Yeah, so you're seeing that right off those single prints. So now what we look for is selling going to come in if there is a seller in the market, right? Because we have a buying opportunity here naturally, right? We have a double distribution, a little baby double distribution, weak spot in the middle. So is there a seller here, or is this just profit taking or selling from old business? If there was real sellers, we'd come back below that 59 weak spot. This weak spot we talked about this morning. Oil's popped up quite a bit here, up at 76, up almost 2%. We've got crude oil inventories coming out in about 49 minutes. Then it's relatively quiet until 2 o'clock. So 10:30 is when we get the oil play, and then that's pretty much it. So far, no play for the bot. Volume is 50% of normal, so not too surprised. Yeah, the volume is a little bit of short covering right there on the 63 quarter. So sellers that sold the high almost taking profit, and we're seeing the VPOC shift up to this 65. If we get a little bit of a pop here, I'm watching the NASDAQ to see if we're going to get some expansion. It does look like it's trying for sure. Struggling though. You're seeing communications here. XLC, remember, has been beat down very bad lately. Is catching quite the bounce here. No play for the bot. We should go up and test this 68, I think. Move a stop to 64.5. I'm long from 63.5, but 64 and I'm out. So just a 1 point trade there. Tried to catch, I tried to just get in on this 63.5 because that's where we saw the short covering at, right? And so if you keep qualifying this level, but right there it failed again, that's the second failure of the upside. But if you can manage just to take the 63.5 here over and over until eventually it breaks up and gets that 68, then you can kind of see a reaction, maybe catch a nice runner off the upside. You just got to be real tight with it. You don't really want to see it. I'm not in a position now, but you don't really want to see this thing go below 63 much, because then it starts to get down into the weaker volume. A little bit more short covering there on the 63. Not as much of a bounce there, though, if you notice, off that 63 this time. Buyers might be getting, oh, there's a bounce off the 63. Let's see if it sustains. This is where buyers stepped in before we made that high. Makes sense to go up there and hit that 68 one more time. Did anybody fade from the single prints? I'm kind of thinking if you did fade from the single prints, as long as the market stays below 68, you're probably golden still. I mean, you've had a chance to take a little bit of profit, but um, as long as it stays below 68, if let's say the market taps 68 here and can't keep going, then probabilities are that it trades down to the VWAP, which is down like 60.
I did catch it.
You shorted 67.25. Good shit, bro.
Well, I didn't get in that high. I caught it on the way down because I was in my sim when I saw that that was what it was looking like it was going to do. Typically what I do is I play in the sim and watch for the trends that I see. And then when I see the trend actually shaping, then I switch to another reels. But it doesn't, it means that my entries aren't always perfect, but it makes it more simple so that I don't trade in my real account and like blow it because it didn't actually formulate exactly as I thought.
Right. Yeah, that's not a bad idea. So there's the 60. So that's kind of what we kind of expected right there, right? Like it did just fail to get the 68 two times, and then you know you hopefully you covered because here we are right back at it. All the shorts start to cover down there. They got a little taste of the VWAP, and they're like, all right, I'll have it back. Covered it all. Good shit. All right, I'll be back. I'm gonna take a little break real quick. Sorry about that, guys. So, looks like the market traded through those single prints, huh? Pretty push right back on the other side of the distribution. Like profit taking was there. 71. DJ, good morning. 57.50. So it looks like volume's picking up a little bit here. Apple kind of stalling out here a little bit. So there's a little bit of an offer here coming in 71 area. And that's right where that profit taken was at. But you're seeing them kind of back and fill this area here. There's a weak spot down here, 67.5. Well, let's see. Any failure to close below that 60 or to get below that 67.5 kind of just confirms that we're going to keep going. Everything else is kind of saying that we're going to keep going. It's not super strong or anything. Like the tick is not blasting 1,000 and going crazy, but there's nothing really saying that this thing's going to be pulling back too significantly. Let's see how we acted when we backtest this 71. A little bid stepping up below the 71. Let's see if it keeps following. This is your first box to sell in, right? Nasdaq struggling a little bit here. And the ES kind of struggling. Bid at 70.50, 70. Have to see if we accept 80 to 90 zone or reject. I don't know. If we accept above this distribution, really, I mean, you're almost like guaranteed to trade to, where would you say is the point of control from this distribution? Let's go like this. Split profile here. Half back of yesterday. So if we accept above the distribution, which is this 72 half, we should test 83 half. And you said you're looking 80, 90. Okay, that makes sense. Yeah.
Yeah, like that 78 to 80, that whole area there. I want
Yeah.
to see if this takes it out of
Yeah.
or accepts into it. It's kind of a tough spot to do anything, really, for me, the way I'm looking at it.
Looking to see if there's stuck supplies selling in this spot unless we get over a 75 quarter, then flip. It actually worked out perfect, TJ. Before you got on, Roach took a short. A came up. I think it was all the way. I think it was. What did you short at, Roach? You shorted like 75.
67, I think
Oh,
67
67.
even, or 67 quarter, somewhere. I wasn't gonna do it, and I saw sellers step in. I think, I don't know where they stepped in. My finger just hit the button. But I took a quick profit because I wasn't real comfortable.
And I mean, it turns out that was the right decision. But I think you timed that fade or waited patiently for that fade, honestly, perfectly, because it came up to like 70. It came up to like 70 or like 69, came back down, and then tried to hit 68 a couple times, failed, and then dropped to 60 quick. But and 59 was that weak spot. Couldn't do anything from there, and then started to run up from there.
Yeah,
So
yeah, I actually
that
managed
play was
well.
there.
Yeah, because I try to give it a little room to run on the second lot, but like I said, I took it. I forget where I covered it. It was down towards the low though, 63 or something.
Yeah, that's good. Right
Worked
on.
out.
Yeah, that's smart.
Yeah, it worked out. Trying to work on holding a little while. Like I said, I like to take quick profits, but trying to let things run a little bit.
Are you mostly
Tough.
trading ES or MES, or is it just mostly a mix?
MES,
Yeah.
but I'll say like one. I'm not. When I say one left, it's usually like either 4 or 5. You know, like in other words,
Oh, okay. Okay,
like
I see.
if I trade a 12 lot, I might take it 4, 4, and 4. You know,
Right.
but I just say I got one on. I got one on. That's all. You know.
Right. Yeah, I get that. Yeah.
Sometimes I trade both. I trade the ES too, but I haven't been lately.
Well, no, that's the only thing I was gonna say is like maybe if you're trading the ES and you're trading like 2 ES slots, maybe trade like 15 MES or something
Yeah,
like that.
that's basically what I'm doing. Trying to hold a little longer. So I went to the MES because, like you know, it's just a little easier to hold.
Yeah.
You're trying to balance though the fact of it's easier to hold the MES, but I don't want to be careless with them either. Where you get that mode where, it's 3 MES, let it go. But I
Yeah,
don't want
that's
to
a bad
get in that
habit.
because
Yeah.
I'm better with the real ES. I'm
Good
better with like
morning. How's
I don't give it
everyone?
much room. I just get out. Good morning. Sorry.
No, that was Peter Reznичek. He's about to do a live session, I think.
Oh, I was rambling on there.
No, that was good. Is my dad on here? Unless we get over 75 quarter. So you were basically right at your spot, TJ. Okay. My dad was trying to return the his shoes to Nike. Nike will refund your shoes if there's a defect within 2 years of their manufacture. But it's a little bit harder to explain through text than okay. Fast upward chop. Yeah, seriously. That's a good way to explain this B period. $13 contracts on that high tick. The VIX is actually down about 0.62. It's coming back down below zero here. Almost right down to the 70 there. Same trade over and over again. No emotion, spying and flipping. I mean, what kind of seems like is initially these longs that were stuck from yesterday covered, and we kind of came back down a little bit, and then when it forced down, it looked like it trapped some shorts here, and then a period, it was kind of almost like single prints, um, and it was really from this low here. So I kind of think that's where everyone was shorting against, or maybe had their stop at that got short down here. And if B period can't get down to this 69 now, then I'd like to see this um nicey breath click positive. You're seeing tech get over 1% now though. Nasdaq's looking strong here. Fade off the top, ticks don't agree. If we get a pull back to trend here. Sellers got stuck on 74 quarter, 74.75 here. Yeah, there they go. They're pushing back down hard.
Looks like they covered on 75, 75.
Yep. Yep. Go. Come on. Here you go. Keep it moving. So from like 80 to 83.75, we can expect some selling most likely. We're seeing a little bit of profit takers bailing on the long here at 77 quarter. Dow's looking pretty strong. It's up 0.4. Nasdaq's up 0.6. ES up 0.5. Russell's up 0.06. So Nasdaq or Russell's looking the weakest. So that's basically where all these small caps, that's where the NYSE is struggling, is the Russell. They keep taking profit up here at 77 quarter. Tick's coming down here. Market's trying to pull back the trend. I see Brett's still down. Energy's getting smacked a little bit here. Well, this is right where people started taking profit last time. Now we're back at this level. So if we don't see profit takers again, then we should see higher prices. Really. Tick is climbing. We should be good. No continuation past 79 there. We're expecting selling on the 80 though. 80 to 83.75 really. Market wants the 80 though. I can tell because it told me. Trying here. Tick is looking kind of weak. I want to see a little bit higher tick here. Still holding trend. I don't know. I think this is just, yeah, probably short covering from yesterday and just kind of a rebalance. I mean, value is just overlapping so far, but I'm just going with value, and value was higher from, the 9th, so 10th, Friday, and then it's Monday. Here it is. So here's Monday, and then Tuesday is just not even overlapping, just higher value, and then today we take basically a ride right off the point of control and keep moving straight up. So it's like these prices were accepted, these prices were accepted, and now we're going to test some of the higher prices that we were at yesterday with this being a week high. And you can see that that's just a couple of ticks. Where's the crosshair? Here's this 42.75, 41. I mean, for me, that's kind of a weak look, but so it makes sense to go up there and at least test it. But right now, everything is pretty much kind of telling us that the upside is the right side. And we've got Powell today too, so who knows what they're up to. So fails again up there. That tick is kind of our sign here. We got a nice positive tick, but situation yet. Offer came in on 78. Like they're stuck here on 77, to be honest. Yep, they are. They're stuck. And now take their lunch. As long as the market stays above 77, right? You move your stop to 76, 75 and just close your eyes. Hopefully this liquidity gets out of the way on the 80 and this thing could just run up to our target. Look on 77 again. Profit taking here before the liquidity wall at 80. Back to this 77. This is where sellers have been kind of hammering or trying to hammer the market and they keep getting stuck on this 77. See if they test the 80. 80 is where all the liquidity's at. 80 all the way up to 83. They're trying to hold. No fuck. Follow through. Yeah, let's go. You got one AMD called January 27th. Strike price is $71. Aggressive selling on the 79, 78 again. But 77 is where they haven't been able to get below. There's a bid that just kind of keeps slurping all this up at 77 every time it gets down there. And it looks like to me that short's just covered, and this is probably where they capitulate. What in the fuck? No buyers show up there. We traded only 45 contracts on the 80. Flirped up on the 77 again. Eight or 9 minutes until C period opens up. Back to 77 here. Not quite the bounce that we've been getting. Look, is this thing so backed up? there's just not much going on here, guys, and so like basically I'm not, I don't want to just like keep like talking tick by tick, just because you know it's like that can just kind of lure people to get in, to get in, to get in, to get in. You know what I mean? I'm in a long still, but I'm in a very, good positions. So I'm just kind of holding it, and really I'm targeting, that 83.75 to see if I'm gonna flatten or if we're gonna go back up to 4K. And if you guys have questions or anything like that, now's the time. And we're gonna be on all day today. My wife's actually off work, so I don't have to pick up the kids. And for Powell, planned it out, so I could be on for Powell all day.
Might get a chance to use your snow shovel this week, buddy.
Oh, fuck off. Yeah, it's supposed to start snowing. They already told me that the kids are going to be on distance learning for Thursday, tomorrow. It's supposed to snow just
Yeah.
basically Thursday morning to Friday morning.
Yeah, they don't fool around usually. They just cancel, which is good.
Yeah. I might have to drive down to Wilkes-Barre though to pick up my wife from work. She can't drive in the snow. I mean, she's from here, so
She's
she
from
can
here, I
she
know.
can drive in the snow. It's just like,
It's dangerous.
well, not really. What happens is like, because you know how Scranton is. What happens is like her dad's like, you shouldn't be driving in the snow, and he'll either go down there and pick her up himself, or it's my job to do it.
Yeah.
Because it's so
Yeah,
old
and if something
school.
ever happens,
Yeah,
well, you know what I mean?
yeah. God forbid.
I don't care how long. It don't matter how long you live here, how good a driver you are, 4-wheel drive. There's other idiots on the road, and you don't know what's gonna happen. I hate when my wife drives.
Yeah, see, you're from here. You're old school. Me, I'm like, she's strong and
Yeah,
independent. Drive her own ass home from work. California, bro.
yeah. I just hope
Isn't that
it's
the
all
point?
snow and not ice. Go ahead, sorry.
Isn't that the point of feminism? Equal rights, equal pay, equal danger.
Yeah,
No. The point of feminism is to just point out something with unfactual data and complain.
and have them donate money to your cause,
Exactly.
and you'll shut up. Donates money, and we'll shut up about it. Like when what's his face we were talking about when what's his face knocked that girl out in the elevator. Well,
Oh
the
yeah, Ray
NFL had
Rice.
to donate. They had to donate a ton of money to women's rights and this and that.
Oh yeah, they did. Yeah.
Get them off their back.
Did feminism kill chivalry? I think it did. It had an inverse effect because people weren't paying attention to the truth. You know, they're like, "Oh, we want equal pay, equal rights, but only in the jobs that we're going to talk about." They're like the it's like they said some stat about how like um men have like fucking 80% of the money or something like that. But like you look at like the top 10 richest people in the world that are men and they've got like 80% of the money. So that's not very fair comparison because the rest of the normal people don't have shit. It's all these rich people that have all of the money and they just happen to be men. So go complain to them. Unless you want to come fucking lay concrete with Roach,
Yeah.
because I
Or we
bet you
could just
fucking
get them.
don't.
We could just get them to identify different.
Yeah.
That would solve the problem, right?
Well, that's a whole nother can of worms.
I was just saying.
Like I said, fucking you get in a freak accident, lose both your thumbs, and then you gotta start fucking registering as a cat.
You're a cat, right?
Yeah. So we're getting our first pullback back to the 50 on the 1 minute, and we're seeing C period come right down below that distribution and then pop back up. So that still tells me that there's some buyers, um, and it might be old business if we don't get a move back up to that 76. But sellers did kind of absorb up here from like 78. It took them some effort to hammer price down to the 71.5 that they got it down to. So really failure to get continuation, you can assume that these sellers that are like in 78.50 to 76 are just they're gonna peace out, and the market will move higher. So it goes back to the sellers. They reoffer. Remember, they've got to get continuation below this 71.50. Offer's still trying to come down. Market's just so slow. Watch here for capitulation. Sellers. This is where they offered 76 to 78.5 is like where the offer's at, where the seller's at. And you're seeing them like just kind of struggle over this lower distribution here. Buyers trying to lift here. So we're seeing sellers maybe get out of the way here, but just because sellers get out of the way doesn't necessarily mean that we get continuation. We need buyers to take their place. Because if there's no buying, then the market will go lower. Just because there isn't selling doesn't mean the market can't go lower. Remember that.
It's the difference between active selling versus passive selling.
Right. And that's the thing a lot of people think. The market is moving higher to shut buying off. Market moves lower to shut off selling. Breath is almost back to break even. Tick is coming up here. Work right off of the point of control. Assume here that on this break of 75, where, like I said, it was 76 to 78.5 is like the sellers, the offer area. So any failure to take this C high on the next look, basically above the point of control, is going to be a weak look, and that will probably give us a fading kind of opportunity. Really, you're watching the 72 area because that's kind of the key level. Opt out of your AMD calls.
Yeah, the bot didn't get in, so I had to buy a couple.
Oh, okay.
But I put my stop at 30 cents down just to
AMD's
try and.
doing a little inverse action today, huh?
Yeah, it popped up early and then it dropped and then it popped back up, but it's been sort of steadily. I think it's just more volatile. I mean, it's basically the same thing the market's done, the ES has done. It just AMD's been a little bit more volatile in its movements.
A little bit of aggressive selling down here. They're trying to force it. It's the poor bastards. Remember what we said right here. Any pop here that doesn't take that C high is probably a fadeable opportunity. Let's see. Buyers are stepping up. They should be able to take this. Yeah, I'm kind of hungry too, to be honest. But I normally don't eat until noon, so I still got an hour and 15 minutes. All right, so there we go. Buyers stepped up. Notice how they left a weak spot below. So that's kind of the target. So if you're long, you want to probably put your stop 76. We shouldn't see below 76 again before we see 83. And if we do, then we don't want to be in the long anymore anyways. So I've had nothing, right? Yeah, I don't eat. I do intermittent fasting. So I don't eat from dinner time until noon. So like probably like 9 o'clock till noon the next day. They say it's really good for you. Yeah, I don't know. I don't know what the science is behind it. I'm just not really hungry in the morning, and I think breakfast is kind of a scam. Like, um, as far as like what they promote for breakfast, so I just assume that it's probably not good for you because you know, like eating sugar first thing in the morning, I feel like unless you're gonna exercise, is not the best idea. So like if I was gonna work out before, but I've been working out after the stream because it's too fucking cold in the morning. Oatmeal. I'm gonna go make a coffee. Yeah, I've just been. Well, I've just only been in a long and just kind of adding to the long on pullbacks, waiting for this 83 like since the open. So. Oh yeah, I'm not. All right, I'm gonna go make coffee. I'll be back, guys. All right. Didn't miss much, huh?
I have a feeling we range in this area until Powell. I mean, isn't that what happened last time?
Yeah, last time the range was pretty tight, yeah. And then we went way up and then way down and then back to normal. That was a crazy day. I think there's big gamma levels on the spot. Score that. Okay. Apple 0 gamma levels 150. So the high from yesterday. And then you have kind of a mix here at 145, which is a little bit lower than where Apple's trading at right now. Is anyone in a trade? I don't want to turn this screen off or like cover this screen if someone's in a trade right now. But if nobody's in a trade, we can just look over all these levels. Yeah,
I'm not in a trade.
I'm good. Do whatever you're gonna do.
Going twice.
I'm fine.
All right. I'm just gonna take a look at from top to bottom and try to kind of come up with a plan for after Powell. Like you said, if we end up ranging in this little range right here for the rest of the day, even if we go down 66 to VWAP and stay from 66 to 80, that's definitely a possibility for the rest of the day. But so this is something that I have created that I wanted to share with you guys. So this dotted line is the 8. This orange line is the 21. And this is a cash only chart, right? So it doesn't show extended hours. But basically it can help us see trend a little bit easier. And all the indicators are free. So if you have Thinkorswim and want to recreate this chart, then you can. And I'll explain everything on the chart in a second. I wanted to text James real quick because I was going to explain this to him, but he might be asleep. And even Jared might be asleep. Seriously, what the fuck's he? What's going on? Okay, so anyways, if we just show the volume subgraph for a second so you can see kind of what this is. I mean, it has all this extra shit in here. I don't pay attention to any of this stuff. Look, buy, sell, whatever. and I kind of hide it. But basically, it just shows us deviations of volume. So let's just kind of zoom in. You can see pink is the highest deviation of volume, orange is the second highest, and then this blue color is the lowest. Because I've changed everything to gray, we won't see any blue. Because blue is just like meh, normal. So I don't really give a shit about it, right? Because if we turn the blue on, like fucking every bar will be blue. It will just be insane. Okay. So, but we don't need that at the bottom because it's just in the way for the most part. Market's trying to break the high right now. E period. We'll come back to it. Coming back up against this trend up here. Continuation finally. The length of time I've been in a trade today is going to be just absolutely insane. All right. And that's the highest that we've seen the tick. Everything's green. Even the NASDAQ breath is starting to trend here a bit. Tough spot here. It's almost like we want to add to our long right here, honestly. Like, as long as the market really kind of holds above this 79 area, I feel like we want to almost add to the long and look to test up for the value area high, at least 87. Shorts are covering 81.75. It's nice. Borat. Have you guys seen Borat? Roach, you probably haven't seen Borat, huh? Don't seem like the type.
No, I didn't.
You should watch it though. It's funny. It's just like it's dumb as fuck, but it's funny. Like, yeah, it's just a funny ass movie, and there's like a ton of one-liners and stuff. So it's like, you know, there's a bunch of.
I saw one clip that was funny. What was he doing? Throwing pennies or something for the Jews or something?
Yeah,
Or he was or cockroaches. That was funny.
he did. He goes to a feminist thing, like a feminist little meeting one time, and he's like just basically just talking shit, and it's pretty fucking funny because the lady's just getting pissed. Like she just takes herself obviously way too seriously, and uh he's like he's basically like, I can't believe they let women have job in this country. And she just fucking she goes mental. It's hilarious.
So he was just like filming real life.
So he's an
Like
English guy. What's his real name? Fuck.
Kind of like Jackass, though, right? Like he was like
No,
film.
not like Jackass. Let me see the actor. What's the actor's name? Sacha Baron Cohen. So he's just like an English guy, but he basically has like personalities. He had a show back in the day where he was like this kind of like English, like white gangster type, where he had like all kinds of chains and stuff, and he's like his name was Ali G. So he does like these characters, and so he does this character from Kazakhstan named Borat, and he just comes to America and just like, you know, he basically just makes the funniest. He basically just pokes fun at all of the shit that America cares about that is so stupid.
Yeah, like he bust everybody's ball.
Exactly. It's funniest and it's funny as fuck. Yeah. All right, let's head back to this chart. So basically, as we can see here, and we're on Apple here, but we can see orange volume, which is basically a second standard deviation of volume. So you can see it's a big volume increase. And yellow is like the first standard deviation, orange second, pink third. And so a lot of times I just like to see that because sometimes intra bar, like maybe when this one was breaking down, this thing turned orange. And so that kind of gives you a sense that maybe you're going to get a little bit of continuation, right? To me, that's kind of just how I look at them. The 8 and 21 thing is something relatively new that I'm just looking at that I saw Peter Resnicek do. Obviously got to give credit where credit is due. But basically he just uses this as like a way to decide, I mean, not really anything. He just says like, if there's a crossover, then a lot of times there's a buying opportunity there. That's what he says. And so I just look for it for pullbacks because he says a lot of times you get these pullbacks to the 8. And so it's just something I'm kind of monitoring. But these levels is really why I pulled this chart up. I just wanted to explain what the chart that it has on here before we go further so everyone's not all confused and stuff. But these are these put gamma levels. Most of you guys have seen these before. You can see the 0 gamma for Apple is at the 150, and you can see the volume kind of increases comparatively. With those intraday volume increases have all been up at these levels. So we can kind of assume at this level here, people are probably selling calls and buying puts, which means that they expect this to act as a resistance. And it has, I mean, this is a kind of a move up, but fail, right? These are a lot more cleaner, but you can't really be exacting in the markets. It's going to just drive you crazy and cause you to do, stupid shit most of the times. But we kind of see where Apple's kind of sitting at, right? And then this 145, there's probably a bunch of short puts. People are probably selling puts below here. We can assume this can kind of act as a support, this 145 on Apple. And remember 155 from, way back. I don't know if this chart even goes back that far. Oh, you can see it just barely. That's kind of where it started. 155, when Apple's above 155, we see the market become very strong. So that's a key level always to watch out for. So like on your daily checklist, and this may evolve over time, obviously, as the market changes. But recently we've seen if Apple's above 155, the market tends to get a little bit strong. So that's something that I tend to check for every morning. Like, okay, what's Apple at? Right? Just because Apple's such a big weight in the market. Take a peek at AMD here. You can see AMD basically above most of its levels and kind of just hanging out at the high. Came up to that resistance, has since kind of traded back below it and is pretty much just sitting here. Amazon, middle of the range. Disney, right at its 0 gamma. So this could be good for the Dow. The Dow is... The Dow's not doing bad. The Dow's up 0.55, so it's pretty much in line with everything else. Everything is pretty much back in sync right now. So seeing Disney pull back to that 8 moving average. I think it's the 8, or it's the 8. Google, kind of middle of the range, really thin. Meta's looking strong, to be honest. Gap up from 2 days ago. This is Monday, and then Tuesday the big gap up. Really didn't trade even back to close the gap. Holding higher. Microsoft, same idea. Netflix, kind of a weird pattern moving on Netflix. Nvidia is still looking a little bit weak, same as AMD. They're kind of inversing the market right now. The triple Q, you see that 290 level. This 285 level is really the big support, but we can assume that people are probably short calls here. So if the market stays above this 290 on the triple Q leading into Powell, you may see a bit of short covering leading into Powell as people start to lighten up just in case he comes out and he just, gives the sign And then the same thing on the ES is kind of right there. That it's at 405 level on the SPY. I mean, and then Tesla just looks like a fucking fat pile of garbage. You see the VIX coming down here a little bit. We want to look at the VIX on the daily though. You can see kind of the VIX coming off of it a little bit here since the beginning of the year. We were at 38.94. Came back down after that gap up day. So good news for the market for the most part. Yeah, pretty boring. Little a little short starting to cover here. It looks like. So struggled on the 79 there, and you're seeing a little bit of liquidation as buyers couldn't get anything going. What it looks like to me. Yep, there's a liquidation. That D low is mechanical, so let's see if they have this juice to break that D low. Response right there off of that 50 moving average on the 1 minute. See the tick trying to climb here a bit. Doesn't hold. They don't have, if they don't have the supply to even break that D low, that's just a huge sign of weakness from sellers. If they can break it, their target's going to be that 67 VWAP. Half back like that. Any pullback like that, I think, is probably a decent opportunity. Breath is still climbing. Tech is a little bit weaker than we would like to see, right? My 1 minute chart moved all the way right? I think so. It might not have been before. So that's twice that they've tried to flush that low and weren't able to do it. We're getting back to the spot where they started to liquidate, which was the 79. Oh, no worries. Yeah, just let me know. I can move it. Yeah, let me know. And big bids here, but not really any price
but
jumps.
buying came in on 875.
Yeah, but it's not going anywhere yet. That's weird.
No, but they are buying it now still. Not really.
Just be careful right here. That's a weird look right there. It looks like sellers might be stuck on the 79 if this thing doesn't come back down. Big bid up is at 81 half.
Need a buyer to step in right here, not let it get back below that 875.
So no follow through. Or
No, and they just bought 975 and it went down.
we're back 79. This is right where the sellers tried last time and kind of got stuck, and then got a little move up. Buyers didn't step up. Let's see if they try it again. And you see when it touched that 50 moving average, it really is kind of like that pin drop feeling, like it sat on attack. I like that explanation, like TJ said. If the NASDAQ can pop, the NASDAQ can go, should be able to drag. I'm watching this tech sector here. I'd like to see it get above that 1%. Last time it was above 1, we got a decent bit of upside. Come on, thing. NASDAQ's struggling here. Short covering underneath this previous Mars low right there. Okay, there's a little bounce in the NASDAQ. Extra. A lot of selling came in at 82 right there. If they can't flush it back below 82, we could expect some shorts to come out, or some short covering to come out. So 82 becomes the new level. 79 to 82. Do again. The offer's trying to hide here. The seller that's sitting at the 82 is trying to be sneaky. Here's what we can assume though. This seller is selling the 82s trying to be sneaky. We can assume that most of the selling up here on the half back was probably old business taking profit. And we got more downside because probably momentum buyers, when we popped above half back that jumped in, got stuck. Right? So we can assume they're gonna they got washed out. And so that added more liquidity to the upside because these basically longs got stuck and then they bought lower, blah blah blah. And so above 82, where they're trying to front run, where people took profit last time, just becomes almost like a trampoline. So the market comes above 82, you're going to get mechanical selling on the 83, and 83 that doesn't take a D low, like a response from the halfback that doesn't take a D low is, pretty much guaranteeing a retest of that value area high, 87. if we just keep, you know, the way we've been going all day, which is like fucking slow grind to the upside here. So here's that 82. So this seller, by moving down, I think is trying to hide, like front run this half back from yesterday. But I think he's trying to hide below this, expecting longs that got long on the point of control to start taking profit. So expecting there to be no buying up here again. The issue becomes is how much heat is he willing to take? Three minutes until E period opens up. All input counts are pretty much even. Oh, Thomas, the hearing is crazy. Did you read the letter? Right, so if nobody takes profit here, we're good. People are taking profit. Please. The letter that he wrote was crazy. What's this guy's name? What do they call him? It's like three letters. Let's see. It's like Sam Bankman.
Talking about SBF.
SBF. There we go. He wrote a letter.
Isn't he like facing 115 years?
I mean, I'm not sure. I'm not following that very
That's what
closely.
they said yesterday, that he's facing up to 115 years.
Yeah, he should get the death penalty. You know, he just fucked people over. But listen to his letter. Where's this fucking letter? He said, I didn't mean for any of this to happen, and I would give anything to be able to go back and do things over again. You are my family, he said. I've lost that, and our old home is an empty warehouse of monitors. When I turn around, there's no one left to talk to. That's what he's talking about when he's talking to the FTX employees. Like, I mean, this is just... I froze up in the face of pressure and leaks, and the Binance letter of intent to purchase and said nothing. He's blaming it like he fucked up. The drying up of credit. I can't find the exact letter. But I mean, he basically was saying like, I'm sorry, please forgive me. Like, how about give the money back? All the people that you took it from, and then maybe we'll forgive you. But probably not. We've got single prints below here now. We can assume that this is where, you know, all those sellers were getting trapped on the 79. But not much of a move higher, really. Not yet. You're just wondering how much heat is a seller willing to take here. basically like as this thing comes back down close to 82, right? That's where we assume that seller was at. If it can't get back below 82, then he's going to start to get nervous and start to cover, and that's when the market break higher. No, Thomas, what was that about? The first, did anyone hear about the first controlled fusion reaction that happened on Monday? It's a tight spot too, because you could have mechanical sellers selling yesterday's value area high, which is around this spot right here.
But that's still, wouldn't E be a poor high for D after we fill the single print? Wouldn't they want to fill that too?
Yeah, it's a weak reference for sure. Yep. I don't. It doesn't look like they're gonna fill the single prints here though.
Yeah, the 8. Oh, it disappeared on my screen. The single print still there?
Yeah.
Oh, it disappeared on mine.
Basically, we can recreate the power of the
Would have
sun.
filled.
Oh, you know what? I did hear something about that. Something about how they converted like 2 gazillion into like 3 gazillion. With like, yeah, I did hear about that actually. I just didn't know what it was referring to. And I didn't look into it very much. Of course, there's so much to do on the containing side. Yeah. Exactly. That's the thing is like creating energy and then getting energy to everybody is 2 completely different things. That's why there's a lot of people out there that were assuming that we were going to create a easily renewable energy and we were going to run out of water. That's why I don't understand why San Diego turned off those desalination plants. That was kind of stupid, I think.
Brad, would you be looking for an entry up here anywhere for with these single prints?
I was trying to get in with the impulse area, but I'm assuming this, I mean, this is taking forever to break. I wanted to get in before, but
They might fill right here.
If I wasn't already in a position, I would be looking probably to fill around like 80. I mean, but you definitely could or like buy against these single prints. You're just looking for the tick to fail here. So if the tick, so we haven't closed singles, tick's coming down, but tick hasn't made a new low. So here's the low here, 279. So if the tick really fails to make a new low and those single prints don't fill, you can pretty much just buy the market. And then well, the thing is, you've got to be tight risk, tight reward here because you might not get much continuation above this level. If we see strong selling on yesterday's value area high, which is like 87, you got to be just willing like to cut the whole position then rather just try to catch a runner because you're just going to be ended up giving up profit because the market is so rotational. Unless you're willing to just sit with the position for the rest of the day, like hold it. But that's a dangerous game to play. But I like this 79.80 level as a level to kind of use as a stop loss. Below that, the market probably gets a bit more rotational, but and now we have opportunity with the E low because D halfback's right there, so you could probably even mitigate a little bit of risk there if you wanted to play the D halfback. But I think that's a little bit too tight. I think that we might come down and look at that 79. Going to the gym to get away before Powell. Yeah, good idea. Pitch workout too, actually.
No Jared today or what?
I don't know what he's doing.
Still
Probably
in bed?
sleeping.
He's gonna sleep right till Powell comes up.
Mhm. Got smacked around by the market yesterday a little bit, so may want to take it easy today.
Oh yeah, I thought he got back. I didn't.
Oh, I don't know.
Thought he got
Maybe he
some.
did. Yeah, I got off
Maybe
after
not.
it.
Maybe not. Yeah.
Yes, he was on in the Discord with you guys, I think. So yeah, maybe he did. I don't know.
I wasn't in there anyway. I don't know.
Just normally, if he does really good in the market, he'll tell me about it while we're gaming, and he didn't say anything about it when we gamed yesterday. So
Yeah.
that's normally just how I judge it.
Big seller there on 84 quarter.
Yeah, same one.
Oh, was he there earlier?
Well, that's just I think that's profit taking.
He got run over. Oh, okay.
Yeah, I think that's just profit taking. That's where they took profit again last time, right as he opened up.
Think the way they're grinding this up, they might dump it right before Powell, or not right before, but before he comes on.
Yeah, I do.
You do, yeah.
Yeah.
I was kind of feeling that.
I mean,
not that I would look for a short, but I think it looks like they're grinding it.
well, the key thing here is, so what's nice about days like this is it sets you up for your turn down service, basically. So we've got, let's say the market gets up a little bit higher, right? And the key thing for the short would be like a fail in this distribution level, like this 4104. Like I like this spot right here. I'd like to see the market just fail right here. And then you've got these targets down here that are mechanical, that you assume that the buying is weak. So that would become the target. So if we can get opportunity to fade, fail of these single prints up here down to some of these mechanical references. I mean, even CB low is fairly mechanical, but there's kind of a P with extension, so looks to be short covering so far. But that gives you like a, at least like the opportunity, or like the comfortability for me. If I get short here and I'm getting like a lot of this, and I'm like, oh, I should close, I know these mechanical references are down there, and that's really where the market wants to go. So just to fix the structure. But it's tough sometimes to sit through a chop right below where you could take a profit. You're like, that's not bad, but it could be so much better.
Yeah.
I like when we get up days that are mechanical, because once the fade is on, typically even if you're in late, you can still find some pretty good targets to put on. So like even if you don't sit through the whole move, like say it comes up here to 4104, but it doesn't look like it's going to fade. It starts to fade down a little bit, and then it keeps going. So we miss the whole down move until it gets back to like right here, half back. We don't see any buying. Comes close to this E low. Well, we can almost go with that short into, assuming, I mean, this is hypothetical. Go with that short and even target just this 76. So E low 82 to 76. What's that? 5, 6 points? 7 points? I don't know. 4, 5, 6 points. So if you just were to wait for one trade like that, that could be a pretty decent trade.
Yeah, 6 points.
Yeah. And that's probably what will happen to me, is because I've been getting long all day, market will come up right to my spot, it'll fail, it'll come back down, and then when I review the day at the end of the day, I'll be like, God damn it, I even said I should have shorted here, and then I fucking didn't because I didn't write it down. It happens to me all the time. And then today at 12:45, I think it is. Let me see if my buddy sent me a message. Yeah, he hasn't sent out his reminder message yet, but there's a Jim Dalton webinar today, I think at 1:50 Eastern time, 13:50 Eastern time. So that'd probably be pretty decent to listen into just to get his perspective of what Powell's talking about. That's always valuable.
Yeah, I was saying that I think Powell's going to crush the market event late long term, just because I think what's happening is whether he cuts or raises or what, doesn't cut. I think he wants to hold rates for a long time. He doesn't want to look like, you know what I mean? When he gets to his level, he wants to hold them there for a while.
Yeah,
I think
the
he's going to
the thing
he's going
is
to
like
crush the market.
at what point does it become what does he want versus what's he actually gonna be told to do,
Okay, yeah, all right.
you know? And so what I'm kind of thinking is because when's the election? 2024, right? What I'm kind of
Yeah,
think
for him.
well for him, yeah, for him and the president,
Yeah, okay.
which is basically, who's in control. Um but so
Oh,
what
yeah,
I'm thinking is because they've been reactionary this whole time, like they're like, inflation is transitory, like no big deal. And I saw a pretty cool graphical representation of basically it was a snake, and so like it was the don't tread on me snake, and I don't know if I could really draw like a great snake here, um but you guys can just kind of bear with me. And then it had kind of like this big lump, and then the tail, and it kind of had like this big lump in its body because of the money that was injected into the market during COVID. And so right now the snake is still the snake of America is still, and it was kind of a funny graphic, is still digesting this what did they call it? Quantitative easing spree that the government went on. And so excuse me. So
but
as it goes through and gets digested, and the market kind of works itself out, this whole time they've been kind of putting it off, putting it off, putting it off, and then finally they saw how bad inflation got, and they're like, "Fuck!" And so then they're like, "No, we're gonna do it. We're gonna do it. We're gonna do it. We're gonna do it." Well, finally, they're up to a point where they're getting to the point where like, "Oh, it's working." So you wonder if they're gonna start easing up or kind of pulling back and being like, "Let's see if this is a good spot where we're at to flatten it out and finish the digestion." So the next report that comes out, um, let's see, let me go to investing.com and go to yesterday.
yeah, well, they're saying it's working, but it's not. They want unemployment high and low and wages low, and that's not happening at all yet. Supposedly, I mean, they listen to what they say anyway.
Well, yeah, and they have a skewed opinion because um they get to basket things the way that they want to basket things.
Well, exactly. Yeah, they get to manipulate all the numbers and everything.
Yeah, it's a massage.
But they don't. They're not really coming out and telling people that they want wages low and unemployment high, because that makes everybody nervous. But that's really what they want. They don't. They don't really care about. Well, I guess it all works together with the economy. I'm saying though, they want us. They want you feeling poor, basically.
Yeah, yeah, exactly.
But so far, from what they're saying, it's not happening. But I don't know.
Trying to get the calendar for next month and see when this PPI number is coming out. Is it not coming out in January?
I don't know when it's coming out.
Oh, maybe there's nothing in January and it's going to be waiting all the way till February because the next Fed interest rate decision is February.
Yeah, maybe with Christmas Day.
Yeah, maybe they're just not loading in like oh, PMI is on January 3rd. Okay. We finally found it. But manufacturing PMI. So that will be the day, sorry that took so long. That will be the day that Powell will see if his decision was the right decision. Right? So then we'll have to wait an entire month till February 1st until they make a new rate decision.
Yeah.
And so basically like today it's interesting to see like is he going to be like, hey, you know what we're doing is working, so we're going to take a deep breath here, see if it's going to work. We're going to just chill for a second based off of the next numbers. We're going to decide from there. And that would mean like 4,200 is on the table if he says something like that. I think.
Yeah. Yeah. The market's looking for an excuse to go up.
Right.
And I don't think it's not going to go up, but I just saying over the next couple of years, I think he's going to put a damper on it. But I guess you never know. You never know what he's going to
Yeah, and what he's going to be told that he has to do, you know?
do. Yeah. Yeah. He's a puppet. I don't know though. He's a hard-headed bastard. I don't know if he listens. I think he has to listen,
Yeah,
but not as
exactly.
well as the others.
That's what I go back and forth with James about actually, is that exact same thing. Is that like is he just gonna tell everybody to fuck off? You know?
I don't think he could do that, but I do think
Right.
he pushes back more than the others. I don't think he's much of a puppet as some of the others. But could he tell them to fuck off? Not really, because
Right. Then he gets
yourself
Jeffrey Epstein. Yeah.
yeah, you'll be in the cheese line. You know what I mean?
Yeah.
The fuck. But I do think he pushes back a little. He's a little.
I think so too. And that's why that was
Yeah.
kind of like my biggest thing with James is like because he was saying James was saying like he has to do what he has to do, and I was saying like yeah, but he's not. He's not doing
Yeah,
that.
yeah.
And so like
So far, he's not changed.
yeah.
But if he keeps not listening, I mean, they'll just take him out at the knees if they have to. You know what I mean?
Right, exactly. Well, he can get fired. Yeah.
Yeah.
It's not as easy as it seems for the president to just fire him, but it's not the hardest thing ever. It just doesn't look good.
Yeah.
And what's crazy is that's a appointed position. So like we're in debt, but the president's like, you know what? I need some money. You're fired. Put somebody else in here.
Yeah. They could probably financially cripple him without even firing him, actually. You know,
Oh yeah.
start, behind the scenes there. That's basically what they do to everybody. You're going to do what we say, or you're going to be losing this and that. But yeah, I agree with you. I think he pushes back a little. I think he, but I remember interest rates in the 80s were like 11%. Like my parents built a house in 82, 83. It was 11% on the mortgage. So,
yeah,
you know,
in
we
like
got room.
in like 2000, interest rates were at like, I think they were at like 7.5 to 9%, or maybe they were at like 10%. And everyone was saying like if they ever went down to 7%, then they would fucking mortgage all their shit and buy property.
Yeah, yeah. Yeah, I didn't even realize they were that high at that time. 42 grand it cost to build a Hanover home in 82. Fucking, I don't know what it would cost today. Probably 270, 250.
Oh, PPI January 18th, 8:30 a.m. Okay, thanks. Inflation rate of increase may come down, but prices, or do they stay at the current elevated levels, never come back down? Yeah. Oh, I agree, Jay. Yeah, I agree 100%. And I was talking about this, um I was talking about gas prices, but similar to kind of what you're saying is like, I remember when gas prices were 150, and then all of a sudden they went up to $3. Actually, they went up to like $5, and then they came back down to $3, and then they just stayed at $3 forever. And now they're going from $3 up to $7, and they're probably going to stay at $5 forever or $6 forever. And it doesn't seem like, when you think about it, you're like $3, $6, whatever. That's not that big of a deal, but that's 100% increase. So if you're selling a product year over year over year over year, and now all of a sudden you're selling it for 100% increase, that's a pretty big gain. And that's the thing, is like, is that going to stand here? And I'm just using fuel as an example. We've seen it in a lot of other things, not just fuel. Fuel just happens to be like the most common thing that pretty much everybody uses. You could say, oh, you could use bread, but people are like, I'm gluten free. People are like, oh, we could use meat. Oh, I'm a vegetarian. Oh, you could use eggs. I'm a vegan. And it's just like, oh, Jesus fucking Christ. Like, you just get so much bullshit. So that's why they keep manipulating the basket to the way that they want it to go. It should be like bread, eggs. And honestly, eggs, like, everyone should just grow their own eggs, Should just be allowed.
You could have chicken.
Yeah, but
Pain in the ass.
well, not really. If you just get a coop and just keep them in there.
Yeah, fuck that. You got to go out there every morning and check on them, clean the coop, and then in the middle of the night, something's attacking them. You got to run out and shoot.
Yeah,
Fucking-
that's
you know
that's
what I mean?
what you don't want to do. Yeah.
Hey, Brad, do you think we're gonna test a little bit more of the downside? We keep getting held at the 78.50.
Reading some. Let's see.
Got a little bit of
About to hear my stop loss get hit. About to hear that. There's a serious chart, man.
Yeah, I mean, it definitely could get that break. People give it up early. That's that value area high. So that's a pretty strong reaction off there. But I mean, really, this thing could pull back to 68 and still be a buyable pullback, I think. But yeah, I mean, that's a pretty decent sized rejection. Took a short at 85 and didn't trust it. Oh, damn. Yeah, that would have been a nice one. If 1 out of every 6 houses had chickens, the eggs wouldn't need to exist. Yeah, that makes complete sense. I got into some deep thought the other day, and I was talking with my wife, and I was like, how long after the human discovered chicken did they decide to eat their babies before they hatch? Like, I can't wait for this chicken to grow. Ah, eggs. You know what I mean? Like, I feel like if everyone had chickens, you'd never run out of food. Chicken and potatoes. Fucking the Irish.
I just want a rooster. I want a rooster because I just like the way they tackle, but that's the only thing you do. People bust your ball. I love when they tackle all day.
My grandfather used to raise, when I was a kid, he used to raise these fighting cocks back when it was legal in Texas.
Yeah.
And they were
Yeah,
mean
cockfight.
as fuck. Yeah.
Yeah. My buddy has a rooster right in Old Forge too. He just don't care. You know what I mean? For that. He lets them run around in everybody's yard. People feed them. But you're not supposed to have a rooster.
My brother that lives out in Santa Cruz had chickens for a while, and they all got killed by a mountain lion.
A mountain lion got him.
He's got it on video too. It's pretty dope.
Oh, really?
Oh no, the video he got, the chicken got killed by a bobcat. But they have mountain lions and they've seen the mountain lion.
Yeah,
before.
Have
yeah,
you
they have
seen that
both.
video on Instagram that went viral of this grizzly bear? These people are getting married and this grizzly bear was killing a moose in the background out of nowhere.
A grizzly bear killing a moose? That's savage.
Yeah, in the background. Here, I might be able to send you the post.
Wasn't
Okay.
it like they were doing wedding shots or something or getting
Yeah, no,
married?
no, no. Like the wedding was going on, the dude, was saying the
Yeah.
vows or whatever, and then next thing you know, you hear like some loud groaning, and it's the background. There's a grizzly bear straight murking a moose.
It's crazy.
Yeah, I saw that on TikTok, actually.
Yeah, that shit was wild.
Like, I'm gonna need some food for the winter. Getting ready to go on that show alone.
Hey, Brad, is this B halfback like even playable from how close like the break from the TPO is? Because like I really don't want to get in another long and get screwed.
So the thing here is basically you're just looking. So here's the initial move up, right? We've got some value here. So you got 3 TPOs here. You could even call it 2 TPOs, right? And you have C
Mhm.
and D, 2 TPOs, and then E period. So 3 TPOs up to here and 4 TPOs here. So this kind of looks below into this 2 TPO range and then is returning back into value. So I mean, I think there's opportunity for the upside to continue, and you're starting to see like the rest of the market agree.
Mhm.
Even energy's come off of it a bit. Tech really is the only thing that's kind of lagging here. So that's what I've really been watching to see if tech's gonna start to come alive or not. And if we're going to be accepted above really this E low. So like B, C, D, E, like right here, basically where the point of control's at, right? I'm looking to see acceptance above that. Because acceptance below that really kind of puts this CB low as the target. And we kind of talked about how that, that trade from, the initial E low down to the D low, because that E low is mechanical, it didn't go up, you fade it, take the E low, D low is the next target. So they already kind of fixed these mechanical references. The next one was here, but this is not really mechanical, this is more of just a lack of supply reference. So if you get down here and there's no supply, this will hold again. Only reason I was looking at 68 is one, because that's where the VWAP's at, and today's halfback is right there as well. So I was thinking maybe if it pulls back to 68, you get a chance to buy it again, based off of if it gets a little bit of support there. But right now we just look like a P profile, for the most part. So you can just assume as the market gets lower, you're going to get short covering, and then higher dies out because all the buying is just short covering. And a long explanation, but
On the field.
No, I understood that. I appreciate that.
yep. Goods are moved by diesel fuel. Yeah, that's true. Yeah, diesel hasn't come off of it at all, really.
AMD has made a pretty tight box for the past, I don't know, 35, almost 40 minutes. Like 71, maybe 71.25 or 71.30 down to 71. It's been pretty much just ranging in there. Hasn't really gone up too far, hasn't really gone down too far. I think that everyone's just waiting for the Fed.
Yeah.
When we can expect it to do.
Oh, you keep cutting out and saying the same thing over.
Wait, was
Going
that
right-
just me? Yo, I thought I was tripping.
I thought I was tripping for a second too. I was like, whoa.
What happened?
You were like,
Uh,
that we can expect. That we can expect.
Oh,
we can
so
expect. I was like, oh shit.
my headset,
Did it die?
so I'm connected to both computers.
Hmm.
And so what happens, so one of them is a Bluetooth dongle and one of them is the Bluetooth of the computer. And so sometimes what happens is that when I'm talking, it'll just all of a sudden cut out. And so I have to disconnect from the other one, but it like totally trashes it anyway. It would have just kept doing that until I reconnected. I found that out the other day that I was talking and all of a sudden somebody was saying to me that that I disconnected it and then all of a sudden it just kept repeating the same thing over and over and over. Technology will fail you. I'm just saying, I've said it before, I'll say it again. Technology will always let you down. Do not put your trust in technology.
A lot of volume coming out here.
Yeah, and that's a pretty decent move off of that low. And right there off of that low, that 75 is actually the cash VWAP. So if it keeps holding the 75, it's probably pretty decent. But if it gives up the 75, that 68 really is kind of the next level down. And that's kind of where the rotations were at today too. I would say probably move this box now that we're here. Spot. Shorts covering on 78. We can imagine that that seller that was on the 82 is still there because there was no stops at the top that got taken. On the high tick, there was only 46 contracts. I think if there was stops up there, I'd probably do a little run over it. But that's a level we can watch here. Above 82, that guy's got to probably start covering more of his position. We're still holding. 84 maybe. Guys, I'm still here. I'm just gonna work out. So if you need something, just shout. I got the speakers on.
Oh, what time are they supposed to have the talk today?
Potentially better.
Wait, what happened, boss?
I'm pretty sure it's released at 1 and then he comes on to speak at 1:30 Eastern.
Eastern?
It's
What time is
Powell,
it?
right? Powell?
Yeah, pal. So-
I know it's today. I thought it was at 12, but it couldn't be because it's 9:21 already out here. So
I
it's
think
gotta be
it's 2 o'clock.
2
I
o'clock.
think
Yeah.
it's 2 o'clock Eastern
Oh, it is
time.
2 o'clock. So it's 1 o'clock my time. Sorry. That's what I was. So in an hour and a half.
It's in an hour. Oh, it should be in an hour.
No,
Hour and a half, hour and 40.
2 p.m. Eastern time is, he said.
So an hour 40.
Oh, 2 p.m. Eastern time. Yeah, so it'd be at an hour and a half. All right, cool.
And that's when the report is released and then he speaks in 2 hours.
All right, bet. I'll catch you guys exactly when they're on. I'm finna go hit the gym real quick.
All right.
See you, bud.
Later, boss.
So States, what are you doing in your trade? Going along. Looks solid.
What'd you say? You're going long, Lincoln?
No, he
Yeah,
was talking about. he
I
was
took a
talking about my trade.
long. I got in with Stacy with what he's doing. He went long from I don't know where. I can't remember.
76.50.
Yeah,
But
so that's
I was
exactly
just-
where I got into.
I'm just playing though, dude. Don't expect it to get a lot of upside.
Yeah, I think this is that area where Brad said that if it comes down, it'd probably test it.
Yeah, see, my thinking was is that if it was gonna come test it, it'll pop in, it might drop down 75 or yeah, 75, but then
I
it'll
put
pop
my
back
stop
up.
at 74.50.
But I'm not expecting it to go anything way like crazy. I'm expecting it to probably make it to like 78.50. This was just a scout.
It's not really giving me any kind of a confirmation one way or the other. I'm out.
Yeah, they just sold 75, 75.
Yeah, I think that was still a good trade.
227 sold.
It took me out on the bottom fucking tick. God damn.
And it's back
Fuck.
above that 75, 75.
I hate that when it does that.
Yeah, that sucks. Then you get back in and it takes you out again.
It's highly possible.
In this case, I had my
Oh,
stop.
fuck me.
In this case, I had my stop below the other candle. So that's why it didn't take me out.
Watch 78 quarter had a big seller that dropped it down. So get up there, keep an eye on it.
Don't expect it to run too far though, like.
No, I got it at 79.
Just make sure you do your.
I just wish I'd have got back in right there where it took me out because that's
Yeah.
the fucking point to get in.
Well,
Son of a bitch.
you had your stop just a little tight because of, I mean, I think I'm right below F low.
You're at 73.
Yeah. Well, it's a little bit lower than that, but just because I like the space. I like the breathing room.
This
We'll see where
motherfucker
it gets to.
take me out, motherfucker.
I may close this out just barely up though. I might not wait for it to get, I might only take a half point on it. We're getting to pretty tight tight range. I mean, this thing has only ranged what, 5 points? Not even that, 3 points in the last half hour.
No, half, 3 point, oh, maybe. From 78 to 73, it's gone at least 5 points.
No, there you go, 5 points. It's just not making any really wide movements. I think that we're probably stuck in this range for until Powell, until the report. Or relatively close. I mean, this is where, I guess earlier that I said that it would be stuck in that range, but then it popped up and came back down.
Ooh,
Yeah, I
it's
think
getting a
it's either
little,
stuck in this,
getting a little
either
volatile.
stuck in this range or going down.
Well, that's not good.
Yeah, I wouldn't.
I'm out again.
Don't chase it, Link. Oh, it stopped me out of my other one. Damn. Oh well, I deserved it. I think if it takes BC, it's not gonna stay there. I think it's gonna pop right back up to about POC. Where all those TPOs are. Where we're 5 TPOs wide. I don't see it staying down there.
What are we doing here?
At least that's my belief. Maybe I'm completely smoking something. We'll see.
Going back down to the high of the overnight Globex,
Where's the high?
72 or yeah, 72.
Yo, what's that pinkish A in A period? See it? What does that stand
Son of a bitch.
Isn't that
Pop back
point of
up.
control of
Half
A period?
back.
No, half back is the one with the square.
Yeah, it's half back.
Half back profile.
Oh, you're right, I'm
Yeah, that's
sorry.
oh, okay, yeah, I was gonna say.
The
I thought
square is the
square
open.
one was half back. Okay, so that's
The
half
square-
back of what, PJ?
The entire profile. So the whole session.
Oh, okay, of the day. Oh,
Yeah, the pink square on A is just the half back of A.
half back
The
of A period.
left- the half back of the session. Yeah. The yellow
gotcha.
A is the open.
Thanks. Yeah, yellow is the open.
And now we rotate back up. Son of a gun.
And I almost bought 72, 2 different 1 minute candles right there, and I didn't. Sorry, I bounced this morning like 3 or 4 times. That's that bottom of my box that I had drawn.
Boy, that G high looks mechanical, huh?
Yeah, sure does. Got a Brad print on the F right now too.
Oh, there it is, the 72. Probably gonna put some excess on the F. And that C and F look mechanical. There it is. There it goes. There's the excess. Think it's going to take out those, whatever those singles are in A? Why does it do that? Down to the mid? Test the VWAP. It's not pointing up. That was pointing up. That was pointing up. VWAP is pointing up. Yeah, I got a customer. I gotta go help them. I'm with the customer states. I'll be back.
Oh, I was muted. My bad sauce. Um, but anyway, so we're looking for this to be accepted in this upper distribution from yesterday, right? We failed right at a very mechanical level, value area high, so it makes sense to get up there and kind of explore these higher prices. But like I was saying, the TPO is not something that tells you when or when not to take a trade. There's not going to be a sign that says, okay, if this, then that. There's never that in trading. And so if that's something that you're searching for, I could do you a favor and end your quest now because it's just not a thing. But the TPO does tell us where value is going. And so we can see right now that value for the most part is just overlapping, and today's range is inside yesterday's range. So we really don't have any new information. So most of the trades, if you are going to trade today, in before the Powell meeting comes up, are going to probably be better suited mechanical trades. Mechanical trades are off of easily referenceable levels and very mechanical in nature, in the sense that they're either going to work right away or they're not going to work right away. So any trades that you're going to take on a day like today, especially when most of the day has been short covering, you're going to want to be in and out, right? There was a nice long trade from the open that you could have held for I mean, you could still be holding it right now, but um, you do want to kind of understand that Powell's coming up here still, and so most of the trades you're getting in aren't really going to get any serious continuation, as we really haven't broken out of yesterday's value until Powell talks. So I want to be taking them off the table. Um, for the most part, though, today we have been on the right side of the market, which is the long side. And if you look on the 1 minute chart here, you can kind of see we've been making higher lows for the most part. Market came down, almost got down to that VWAP. I had some actually resting orders down at 68 that never got filled, and then we turned up. So got a nice little bounce going on here, but yeah, that's pretty much it. And nice to have you. Welcome to the trade bet if you're new. If you're not new and you're just chatting for the first time, glad to see you. And I would encourage everybody to ask more questions, because that's what this is all about, sharing information. Great question. Oh, excuse me. So we're seeing a bit of upside right off the right before this Fed meeting here. In about a little bit less than 30 minutes here now.
I'm here, Stace. You there? What are you doing?
Can you hear me, Dad?
Hey,
Oh, hey,
you're
Brad.
you're
Oh, okay.
unmuted in both the Zoom and the regular and the Discord.
What the fuck is all this noise? Someone got background noise.
Hold on one sec.
I was unmuted in what? You're live. Your audio is live. Oh well, fucking A. That's why. Mute the Zoom. How do I mute the? I can't mute the Zoom. I don't know how to. Huh? Are you there, Brad?
Yeah.
Oh, okay. Well, I was talking to Stacy and on the Discord. I'm watching his. Well, he was in a trade. I guess I thought he was in a trade.
Dude, I've been in the chat this whole time and just barely figured out my mic.
I'm still in that trade.
Fucking Jared.
I'm still in that trade. I'm in 2 separate sim accounts.
I wish I was in that trade still. I got out.
Are you there? Can you hear me here, Stace?
Yeah, I can hear you in both.
Okay, I turned my Discord off. So
Okay,
I'm just gonna be in the Zoom.
That makes it easier.
I didn't know the Zoom was still open.
Yeah, I kept the stream on and everything today because we got Powell and
Okay.
Margaret actually is like awake and out, so she can get the kids today.
Damn, I caught 3 points of that trade. That's not bad.
I should have done this in real. I was doing it in sim just because I wanted to play, just because I wanted to see. I was like thinking that there would be a jump at the before Fed. Well, I was thinking it would actually happen after the report came out or right before the report came out and then before he actually spoke. And so I was trying to catch it because
So before he speaks at 2 o'clock is going to be like the precursor. So all the things are going to come out. And then at 2:30, he's actually going to start taking questions. That's when he's supposed to come out, 2:30.
Right.
So there's most of the move, I think, is going to be based off of the new dot plot or the new target Fed funds rate. So if the new target Fed funds rate is like 4.6, then we should be, almost golden, I feel like.
I kind of want to long, Brad.
Yes, I am. But so I only have one lot on, and my average is 65. I traded a lot down here, just like little scalps. But I was gonna add size at the 68, and I had these limit orders down here at the 68, but
it never came.
As it started going up, I was scalping, but I didn't hold, so I only have one lot on. But I'm thinking that we go to 4,100, honestly, and that's why I kind of want to hold it.
You know, it's weird when you scalp, if you have a long trade on and you scalp in Ninja, it takes a negative and moves your profit down.
Yeah, but that's the thing is, like, if you're keeping track of your own trades, like, that thing doesn't even matter. Like, I don't even pay it. Mine does the same thing. And the Sierra chart does the same thing. But if you're keeping track of your own trades, you should be. That thing literally means nothing. That's why, like, I trust the stats on Sierra a little bit. Ninja Trader tends to give you a little bit greener outlook, I guess. Like, its report makes you kind of look better than you are, maybe. At least that's how I feel. But you know, you've really got to get those those stats from your own calculations. And that's going to come from Excel. That's the easiest way, I think. That's where I use. So this is that Fed's funds rate. Let me move this over so we can see it still, because we're just cruising right along. Where's the dot plot? That's what we want to see. So the chart, this is what I like to see the best, honestly. So at 2 o'clock, there's a new one that's going to come out. And you can see, basically, they think that rates are going to stay here during 5. And this is what we talked about a month ago when we said, we just have to wait for Powell to say that the rate hikes are going to taper out. And that's going to be your opportune time to buy along. Well, he said that back in November. And we just fucking nailed it, right? But if this new dot plot comes out and we see dots up here and they're thinking maybe 6, maybe 5.5, you know, if they're thinking that they've got to keep raising rates, then the market's going to go to shit. But if it comes out and it's similar, maybe even a little bit higher, but just kind of similar with this nice decline, one outlier, you know, probably fucking, what's the lady from San Francisco? She just wants the market to crash. She missed the dip. But for the longer run, rates come back down to 2.5. And that's kind of like what Roach and I were talking about. Are we going to see maybe Powell kind of do what he did last time and say what kind of disagree with what he should be doing, right? Because we all know how everything works. So is he gonna say what he should say, or what they want him to say, or is he gonna say, listen, I told you guys I wasn't fucking kidding, and these rates, they're going up until we get inflation under there. So they could be the opposite. So if he doesn't take a break, he could just keep raising rates and then just drive inflation back down, and we could see inflation lower quicker. And that could be his goal. If he's like, oh, this is working, I'm just going to press the gas a little bit. And so that way you'd start seeing these lower dots here in the 24, and that would kind of be a bullish situation as well. And so the way that I'm kind of like weighing it out, at least, is like, it seems like based off of the amount of situations you can conjure, most of them, or the majority, are bullish situations. So even for a selling situation, it would make sense to me for the market to go up to 4,200 and then sell off from there.
4,100?
Too.
Or do you think it'll go up to 4,200?
I mean, not today necessarily, but like I'm just saying, like,
I was like, damn.
No, I'm just saying, like, it makes sense for the market to go up there, and I'm not saying in a straight line either, because normally we don't go up in a straight line, but it would make sense for that to kind of be the target here.
Are you there, Brad?
Yeah.
What time does Pell talk? You said in an hour and 15 minutes?
Right.
Okay.
No, I thought he talked at 2:30.
2:30, yeah. So like, yeah.
Isn't it almost 2 right now?
Yeah, 15 till.
Yeah, that's not an hour and 30 minutes. That's 45 minutes.
We'll get it together.
I have an alarm set, so it'll go off when it goes off.
Apparently what people think he's gonna say is good news because market ripped up. My original entry, Brad, was 72. And
Nice.
then I held all the way to 81. Or actually, I'm sorry, I got out at 80 and then it went up to 82.50. Then it went back down to 80. I bought it again. I got out at 82.50. And then I totally missed that like 8-point run up at the end.
Okay. Love you.
Love you.
Oh, I wasn't on mute.
Let me see if we can find the meeting.
Well, that's actually a very concise way to put it. So Dominic and Tom, I think that's well said. I think the pandemic was really 3 Six Sigma shocks.
This
It
is
was
just
a
the
once-in-a-century pandemic.
quick take.
There was the shutting down of the global economy, which in 1918, and I wasn't around for it, I don't think we did. And then there was a monetary and fiscal policy response. I was there for the monetary policy response. That was also Six Sigma. And then there's a reopening of the economy with the vaccines. And these are all, in and of themselves, themselves, these would all be big macro shocks to confront. And we've had 3 or 4 of them in about 3 years. But yes, there's a supply piece. The reopening is happening, probably more slowly than I thought a year or so ago when I was at the Fed, but it is happening. But I think Chair Powell and the committee is correct. There is a demand element to it, and you see that especially in the service sector. And I think that's why the Fed is right to push rates up into a somewhat restrictive territory so we can take care of the demand problem as the supply side heals.
Does the Fed as an institution want to diminish wage growth or in some way change the inflation-adjusted wage dynamic? I feel like I'm in the 1930 Englands here. Yeah, help me here with that.
Yeah, and in fact, I gave several speeches on this while I was at the Fed pre-pandemic. Of course not. The Fed wants wages to grow as fast as they can at a pace consistent with productivity and price stability. And indeed, wages were picking up quite nicely at the tail end of the recovery before the pandemic. And in fact, the Fed was easing rates because inflation was too low with that. So the Fed's not trying to reduce wage increases if they're consistent with the inflation target. The challenge now is that wages are going up between 5 and 7%, depending on your index. Productivity is somewhere in the ones. 5 minus 1 is 4. It's not 2. And so wage inflation does have to step down, and or productivity would need to step up, which a lot of folks don't expect. So no, the Fed doesn't want lower wage increases, but it has to run a policy that delivers wage inflation that's consistent with the price stability mandate.
Rich, over the last few months, I think people have been surprised, in fact, through much of this year, just how resilient the labour market has been and just how many upside surprises we've had on payrolls Fridays. Rich, looking out to 23, can I ask you, do you have more confidence in the path for inflation or the path for growth?
Wow. Oh, wow. I think that's posed quite well. Let me think out loud. I think growth will downshift below trend. I guess the surprise, John, is we had a downshift in growth through the first 3 quarters of this year, and we didn't really see a marked downshift in employment growth. Typically, employment growth is a lagging indicator. I expect it to downshift next year. You know, in a softish landing scenario, it downshifts sharply, but it's positive. In a mild recession, you know, we may have a couple of negative quarters. So it's hard to tell, but I do think we will get a downshift in employment growth next year. But again, that's a forecast. We haven't really seen it so far.
Priya, do we need a recession to get inflation down?
I think so. I think you need the unemployment rate significantly higher to get those wages consistent with, as Professor Clarida said, you have to get them consistent with that 2% target. And there's that 3.5 on wages. How do you go from 5% to 3.5 on wages without a big rise in the unemployment rate? So, I mean, I think the beverage curve has shifted. We talked about supply side issues.
5 minutes until this report comes out.
So the only way to get the unemployment rate, to get wages down, is to get that unemployment rate higher. I just think the Fed, it's tricky to fine tune it. You just want the unemployment rate a percentage point higher, but it's hard to stop it once it starts to rise. There's herd mentality, and that's when it keeps rising, and we'll need the Fed to respond, because I don't think you get any fiscal response then.
Rich, this is really one of the reasons why there's been a question around the Fed's credibility, because they have not been projecting a material rise in the unemployment rate. They have not been projecting recession. Do they need to do both of those things in their forecasts in order to regain some sort of, I don't want to say control, but greater influence over the market pricing of these types of things?
Yeah. It's an excellent point. If you Lisa, if you compare the September projections with the March projections, they were definitely a move in a more realistic direction. So I believe in September, the committee, the median participant, had the unemployment rate rising to 4.4, which would be about a 1-point rise over the lowest level that we've seen. Now, historically, we all know the Dudley rule of thumb, which is if you get more than 4/10 rise in unemployment in the past, it's always been a recession. So I would argue implicitly, although Chair Powell may not use the R word today, their forecast is more or less consistent, I think, with a modest recession. The last thing I'll say is I've gone back and looked, and the 2 mildest recessions in the last 30 years were in 1990 and in 2001. In both of those, they only lasted 8 or 9 months, but in both of those, the unemployment rate rose about 1.5 points. So if we were to get a recession with a 1-point rise in unemployment, it would be something that we've not seen, which is really Priya's point.
Priya, not your confidence out 12 months, but even your confidence in where the markets are out 3 or 4 Fed meetings. What's your confidence in May
Volume's definitely picking
or
up
June?
over this last 30 minutes.
It's low. I mean, I should say the market is less liquid. So we get
Yeah, I can't listen to that fucking trash anymore. So. Yeah, I mean, that's pretty standard operating procedure right there. P is indicates short covering. But typically, at least for in my experience, I mean, fuck, when Powell talks, it's not gonna none of that shit's gonna matter anyways. But typically when we get excess to the upside on a P shape, that means that the market still wants to go higher. So it's short covering, yeah, but it's also short covering with new money buying off of this level here. And they're short-term traders, but they're, you know, I think most money in the market right now is short-term, to be honest with you. Like I was saying yesterday, I think most of the selling is retail. And so it's just like market makers just like easily fighting retail traders' urge to get short for some reason at all times.
What level should we expect to the upside?
4,100 is the first level to the upside.
T minus 10 seconds.
He said yesterday's low is a poor low. It's a weak low, but not a poor low. Maybe he meant weak low. I mean, he's like 90, so.
Damn it.
Offer is above on 89 right now.
I got 5 points and it freaking just like didn't even give me the ability to move.
Oh, that's why he had a poor low. Whoa, holy shit.
Whoa, that was crazy.
Lesharewski. There it goes. I wonder what he said. Right down to the settle.
I wonder what he
hell?
said.
And then it did a sell and it gave me 3.5 points. I don't even know if that actually worked.
What did that son of a bitch say?
Did that actually work? No, son of a bitch. That's all right.
Getting crazy out there. This is why it's like you can't really trade during these times. You know what I mean? Like if you're in a trade when this news is coming out, you're just 100% risking it for the biscuit. You know what I mean?
Mm-hmm.
I lost 0.224 points. So I had my orders in, and because I had to cancel the automatic orders and I had to create my own. And so it picked up the sell, but I didn't get the stop in time, and then it freaking hit my stop, and so it bought again, or I guess it sold again. And so then I closed it, and evidently it wasn't far enough down. And so I lost 0.224 points. I've had 100% all day, except that one happy trade.
So would this be considered a falling knife, Brad?
Dang it.
Oh yeah, VJ, I closed at I think it was 78 or something. Yeah. 70,
Oh boy.
78 quarter.
Dude, there's just like a few more pukes. That was awesome. I was in a short and it worked, but it just like was like, here's your stop, take it. You know.
This thing's just going lower. Holy hell.
Oh dude.
Look at the
It's
NASDAQ.
running.
Oh my god. Dude, Jared, I hit the nastiest NASDAQ short yesterday.
Really?
Oh dude, it was like over 200 points.
Damn.
Yeah, it was a beast. Gosh, look at
What's it gonna do at like 25, 26 area though?
Yeah, we'll see. This is where people are still trapped down here. Oh yeah, I'm not really a, a gambler of the super huge volatility. Not until you get like the cooling. So failure to break value area low, basically traded down there. Back into balance at 50. Look at even the weighted AD went negative here. Not the whole market though, but weighted AD.
The tick was what, negative like 1200?
1331.
Negative 1331. Damn.
The December contract, like I don't know, that contract doesn't matter. It's all anyone that's holding that December contract still is just trading low psycho liquidity, I feel like.
I think we might dump down to 39.70, 39.65. Especially once he starts talking.
Yeah.
I'm glad I didn't buy back into my AMD calls. Those things freaking shit the bed.
I don't know if the numbers matter really. Because like you're not going to trade those numbers. You know what I mean? Like those just because that one bounced off the 4,000 doesn't. I don't know. I don't think that really matters. I mean, if you were maybe taking a mechanical trade, yes, that would make sense. But and if you're looking for a reason why this thing's not just keeping going and saying the December contracts bouncing off 4,000, so just because that December contract's at 4,000, people are buying this contract, I don't think that's a thing. That's what Jim said. Oh yeah. Yeah, see, that's what I'm saying. I don't think he. I don't know. I don't want to say that. Doesn't matter. Seems like it doesn't matter. Damn, nice. Future rate hikes seem appropriate, Fed says. Damn. Yeah, I was just looking on Twitter at stuff.
Dang, right back to that low. And see you later.
So the first move is down. Normally we don't see this. Normally we see like the move up and then a crush. So
My
I'm
rally
interesting.
Are you thinking it's gonna come back up after he starts talking or something?
No, but I'm just saying typically on a Powell speech day, there's two moves. So just be careful of getting short at a low.
I ain't getting short at all.
Jared's all, wait, I was short. I've been short since the beginning. Since 2 days ago. I just knew.
I've been short since 94. Well, no, I think you even said, Brad, that there was a lot of people trapped down there, you know?
Yeah, right here where the single prints are at from yesterday.
Mm-hmm.
And now the gap is filled to the low.
I mean, it's tempting to try to take a long from here, but
No, right?
When he comes on though, you have no idea if he's not gonna say what like Brad was saying. We're gonna frickin' raise rates until you guys stop increasing inflation. Because I'm sure there's another downside possible if he comes in and frickin' brings down the hammer.
You know he's gonna be like, listen, I'm serious. Stop spending money.
Yeah. Yeah.
Shit is really bad, guys. Knock it off.
So it's an 84% chance that it's a 50-point basis rate hike. Let's look at the dot plot. I'm looking for the target rate. That's what we need the information for. Fed. The RG target. It says 5. When is this printed though? Source where? Source is the Federal Reserve. 1214.
Hey Brad, I got a question for you.
Mm-hmm.
Every single time I log in, I always have to switch it to the H3. Is there a way to like just make that the one I want to start open up on?
To the what?
The H3 contract?
Yeah, just save it when you close it.
Dude, I've hit save and it just keeps going back every time I open it. It's like ESZ2 and I'm like, knock it off.
Oh yeah, I'm not sure. Mine doesn't do that. It should save it.
What the hell?
If we get over the settle, honestly, I start to get like pretty bullish. Not gonna lie. I'm like, dang, back above the point of control from yesterday. Anybody that's short is fucked, and it's time. But that's kind of my line in the sand today. from yesterday, right? Like it's half back today too, which is kind of funny, but this is kind of the area that we talked about this morning. The settle being, if we can stay above that settle, we can get some upside. Well, so far today we have until this puke, but if we can get back up there again, remember the impulse was basically off of yesterday's half back. That would be the target. If we can find some support here, the first target would be that 83.75 and then that 4100.
To answer John's question in the chat, he says he has no idea how people trade like this. They do it with 60 freaking point spreads between their order price and their stop and their sell, because you can't freaking trade like this. This is impossible. No tight stops on this, that's for damn sure.
And you know, if you do trade this and you're opening up that risk, you need to make sure your take profits are farther as well. You can't just be like, oh, well, I'm gonna have a 10-point stop, but I'm still going for my 2 tick scalps. Like, that's just not acceptable.
Yeah, no.
You want it the other way if you trade this. You want like a 5 tick stop loss and 100 tick take profit.
Yeah. You got to be way out there to play this.
Yeah, shit moving crazy.
It's super thin.
Well, it's all pretty much fake. I mean, this is all based on the perceived impression of what the document says. Until he talks, I mean, and that's what happened last time. That, I mean, it freaking shot up when the report came out, and I mean, went up like what, 80 points or something? And then he came in and talked, and then it freaking tanked right after.
Yeah, and that was the low. And then
yeah, exactly.
Every day after that, we went up.
Yeah. So, I mean,
I wish James was listening right now.
Oh, damn.
Let's try to do this again. See.
A lot of liquidity up at the 50 here. What other what other things had gaps today? Apple didn't have a gap. Amazon, no gap. Google has not closed its gap. That is something that we want to take note of. Put an alert so we can know that. Neither has Johnson & Johnson. And it's got a ways to go. Neither has Meta. Neither has Microsoft.
Looks like they're trying to put the hammer back down on them.
The thing is, when you hammer a rubber ball, sometimes depending upon how dense it is, that hammer is going to come back and hit you in the face. That's what some people just never learn. They just keep hammering away.
Look at me.
Or you have the other people that only have one ability to one trade style, and it's so everything is a trend, or everything is so that they only keep playing that same exact trend or same exact method every single time, no matter what.
I'd rather that than trying the same thing that doesn't work over and over.
Damn, I think we're going up.
Well, there's a phrase. What is the phrase? If the only tool you have, everything is a nail. Something like that.
Or yeah, if you only have a hammer, or if the only tool you have is a hammer, everything starts to look like a nail.
Right. That's what I'm saying is if you
Yeah.
only have one like ability, then you start to look for things that potentially aren't even there. And that's kind of a dangerous position. TJ said if you have the patience and you wait for the nail to line up perfectly every time, that is true. But the problem is not every nail is a nail. That's the issue.
Yeah, they could just be trapping all these longs right here because these people will fold quickly if he breaks that 22. But I don't know.
You mean to the downside?
Mm-hmm. Yeah, they could just be trapping all these longs.
Well, they've tried to go up to that 43, between that 43 and 45, 3 times already and got rejected.
The 20 moving average on the SPX is like right below the low. The ES is a little bit lower. Down at the balance low. Really what we're doing is we're just, waiting to see if we're going to get acceptance back inside yesterday's range or acceptance below yesterday's range. That's it. I just want to be a little bit more patient and kind of try it from up above the point of control. Get accepted above there, then it makes sense to kind of test that volume again. But if it gets below here, these single prints become the target. Minutes until Powell gets on TV too.
Order.
Make sure that your stops are duly adjusted for when he starts talking. If you try to hold a tight stop on that when he starts speaking, plan on getting either stopped out or hitting your profit target in about a millisecond. If I remember correctly, it actually started to get volatile before he even said a word.
Yeah, that's happened today as well.
This is sort of the balance right here, huh? 40-39. It just seems like it goes up that level, down that level, up that level. That's where people are like, all right, let's get ready.
They're preparing themselves.
Yeah.
Strap it in. Ready for the wild ride.
Yesterday, or not yesterday, it was actually Monday, but I think it was like JP Morgan or one bank was like, one of the banks was like saying that they were expecting a 10% increase in the stock market if Powell comes out with good news or something like that.
Really?
I think it was JP Morgan.
Yeah, I heard that too.
Something crazy, yeah.
I was wondering if they were just wanting everybody to FOMO along if certain news came out, so they had liquidity to do what they wanted.
Yeah, that's kind of what I was thinking too, actually, yeah. Every time I hear like a bank come out with news, I'm like automatically assume the opposite initially. You know, like that's probably bullshit. Like,
Look, they're just trying to help every average American.
Yeah.
Trying to help us all make
No,
money.
We
just,
want
I
what's
was gonna
best for
say,
you. You're like,
they're
what?
just trying to, pad their pockets with the interest. Hey, everything's gonna be great. Take a loan. Here you go. 72% interest.
Do you need the money?
How bad do you want this money? Seven minutes. Are you gonna have the audio?
yeah, I'll pull it up.
Not that it's really gonna matter because he's gonna have double talk anyway. It's not like he's gonna come out and go, dude, we're screwed.
Yeah. But there is a lot of like volatility while he's speaking based off of what he says. So, oof. Yep.
All those
Here we go.
keywords. There's like little AI things listening to the words that he's saying. Oh, he said that word. Sell everything.
Mm-hmm.
Watch this weak spot right here on the 44, 45. If we can get above that, I think we might be good. Back inside the Globex range. Might be able to catch it early.
Counts are 1 and 71. They were 0 and 100 and something a little earlier.
I'll probably try to talk down consumer spending markets to bring down inflation, not looking at any positive talk short term. Probably not. It's the CME website, Thomas. Just type in Fed Funds Rate Tool into Google and it'll be the first link that pops up. %2 inflation target will be achieved by 2025, says the Fed. Probably not. I mean, in my humble, non-studied economic opinion, but I think that what will happen is we'll taper and so will inflation, and it'll take time, but it'll just become like the new norm. That's what seems to happen. Oh yeah, no problem, Thomas. Yeah.
Makes me wonder. I mean, after a move like that, it makes me wonder how much more it's going to move whenever Powell talks. That's what's going to be crazy to see.
Remember last time it went up, probably like my uncle was saying, it went up like 80 points up and then came all the way back down like another 80 points.
I was thinking the same thing last time when it jumped up, and because I was in, I don't think the bot got in, and I think I had to do manual trade, and so I got into a trade, and then right when he started talking, it was kind of like leveling out, and I was like, oh, I'm gonna close it, and I freaking just barely closed it, and then all of a sudden it freaking the bottom fell out, and it went boom all the way down to the bottom. I think I made like $8 on 4 contracts, so it wasn't like I was like, you know, walking away with a pretty penny or anything, because I didn't get it all the way up. I just got it after it had already started to climb. And I mean, it freaking tanked all the way back down, exactly like to the point where it started from.
You just think the Fed's not serving up any Happy Meals today?
Well, sometimes they got to be realistic. I can say this, he's not a politician, that's for damn sure.
But he is a lawyer.
No kissing babies and passing out balloons.
Yeah, but he is a lawyer. And lawyers are very slithery. Sneaky.
Well, that's the double talk, the double speak.
Yeah, you don't get in that position without having a forked tongue. So you don't get that job.
All right, what's going to be the result of him walking up to the microphone?
Oh, shit. Let me get it.
He's going to walk up to the mic and it's going to drop 50 points. And there we go. He must be standing at the microphone.
He's standing at the mic. Doesn't say anything.
I mean, freaking a new 5-minute candle and it dropped like 6 points right out the 8 points right out the bat. Right.
You know, you know they have like some person. They're like, look at his face. He looks pissed. Sell.
They've got like AI looking at his facial micro expressions.
Yeah.
Going, oh, this can't be good.
Just walks in like the Grim Reaper, huh?
Did you find it, Brad?
Mm-mm.
Isn't it? I think there's a YouTube link.
Oh, here we go. I got it. He's not out yet.
I was making a joke. I wasn't being sincere with my statement of him walking to the microphone. I just saw it drop and I was correlating two completely unrelated events.
And here he comes.
He's late again. That's bad news. Because last time he was late, the market went down a fuckload.
I'm just listening to everything you guys are talking about, and I'm like, damn, I got so much to learn.
So much to learn?
Yeah.
Well, you're young, bro. You're only 21 years old, right?
Dude, you have a lot of years.
20, yeah.
You have a lot of years to screw up and figure out what you did wrong.
I'm a lot older and I'm still learning. I'm still into the.
Well, I think we all are. I don't think anyone's.
Yeah, nobody's got it all figured out. That's the secret of life.
I think the only thing I have figured out is that I am not going to figure it all out.
Here he comes.
We have a single print on that 51, I think. No, wait.
Oh, he's walking up.
50-50. Oh shit! This is about a boost.
The boost.
Before I go into the details of today's meeting, I'd like to underscore for the American people
Barely. It's pretty
that
quiet.
We understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy.
Can't hear it now.
Tightening so far are yet to be felt.
Okay.
Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by a 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates.
Back into yesterday's
higher
range.
Interest rates and slower output growth
All right,
also
who thinks we're
appear to be
breaking
weighing on
4K?
business fixed investment.
Put up a poll.
As shown in our summary of economic projections, the median projection for real GDP growth stands at
Single
just
prints are the target here.
0.5% this
So
year.
it was bad news.
Below the median estimate.
I should have freaking done this trade in real.
So it
Holy
was
shit, I'm at
bad
31
news.
points
The labor
in
market
4
remains
fucking
extremely
contracts,
tight.
and I did it in
With
sim
the
because I was like,
unemployment rate near
I ain't doing this in
50-year low.
real.
Job vacancies still very high.
So I
and
guess he
wage
had bad
growth
news.
elevated. Job gains have been
Yeah,
robust,
we're breaking
with
4K.
employment rising by
There's
an
no
average
way
of
this thing ain't going
272,000
popping and below.
jobs per month.
Yeah,
over
we're
the last
breaking.
3
I
months.
think we go at least to 39.6.
Although job vacancies
Maybe
have been
lower.
below their highs,
All right,
and the pace of
39.50
job
is the
gains has slowed from
39.50 is
earlier
the
in the year.
target.
The labor market continues to be out of balance, with demand substantially exceeding the supply of available workers.
Okay, let's take a look.
The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the
I guess
labor
it
market
depends
to
on what
come
he says,
into better
though.
balance over time, easing upward pressures on wages and prices.
Well, we popped the 4K level.
The median projection
I
in
don't
the
see it
S&P
popping
for the
back
unemployment
above.
rate rises to 4.6%.
So it fills all the single
at the
prints
end of
here,
next
so we can
year.
assume that there's going to be some covering here.
Inflation remains well above our longer run goal.
Offer
of
came
2%.
down to like
Over the 12 months ending in
44,004.
October, total PCE prices rose 6%.
Damn, that was
Excluding
a
the
hell of a
volatile
trade.
food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But
The liquidation
it
break.
will take
It's gonna run up to the
substantially more
top.
evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident
What's
across a broad range of goods and services.
Jim saying about the low now?
Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on
You still on?
inflation.
Dr. VJ?
The median projection in the SEP for total PCE inflation is 5.6% this year and falls 3.1% next year, 2.5% in 2024, and 2.1% in 2025.
Google closed the gap.
Participants
below.
continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
So this is what you've got to assume
Fed's
that's
monetary
going on right
policy
here.
actions are
right?
guided by our
So
mandate to promote maximum
we
employment
failed to
and
get
stable
accepted
prices for the
here,
American
so it
people.
built up a bunch of inventory,
My colleagues
liquidated,
and I are acutely aware.
and now you're
High
getting all these
inflation
shorts
imposes
that piled in,
significant hardship
an
as it
opportunity
erodes
to buy
purchasing
back,
power,
and then you got some mechanical
especially
buyers
for
off of
those
this
least able to
previous
meet the higher
halfback.
costs of essentials
So
like
now
food,
what you're going to
housing,
see
and
is, are they
transportation.
going to rebuild structure here, repair
We are highly
structure
attentive to the
in
risks
this
that high
area,
inflation poses to both
right?
sides of our mandate,
And they'll look
and we are
to,
strongly committed
trade
to
up
returning
after all of the
inflation to
business
our
has been
2%
completed
objective.
here. or if they decide, you know what, we don't like these prices, and they'll get back into yesterday's value. So it's a pretty easy observation of kind of what's going on as far as
and we are continuing the process of
what to do. If this happens, then do that. If that happens, then do this.
With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Over the course of the year, financial conditions have tightened significantly in response to our policy actions. Financial conditions fluctuate in the short term in response to many factors.
Remember, he's still just reading a pre-written statement.
They reflect.
So there's nothing going on here. He hasn't said anything else bad.
The policy restraint that we're putting in place to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on
this gets up above 40.24. I'd be impressed.
Tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings.
Remember, the 45 was a big level before that liquidation break as well in the K. So if it gets up above 26, then we want to target that
level of federal funds
45, which is the halfback of today's
at the end of next year,
range so far.
A half percentage point higher than projected in September. The median
See, that's so mechanical. Like, think about this, right? So,
and 3.1%.
Before this extension down, this was not halfback.
Still above
right?
the median.
But now that the market extended lower, right at 45, where the liquidation happened from, like initially during this period, right? I mean, it's up here 51, but where that liquidation happened from now is the halfback.
Our decisions will depend on the totality of incoming data.
It's like
for economic activity.
You know, it's a planned thing. Like, okay, let's push the market down this much, and we'll buy it back at this percent down. Right? That's what it seems like so far.
We're taking forceful steps to moderate demand.
That makes me think that it's like, uh-oh,
our overarching focus is using
little Johnny's got daddy's keys.
Back down to our 2% goal.
I think that they were trying to
longer-term inflation.
I mean, don't you think it was like they thought it got too big for its britches, and they were like, we need to smash it down just so that we can be certain that the people aren't overextending themselves?
No, I think people are just liquidating just in case Powell answers any questions the wrong way.
Over the long run.
Just in case it, like, the freaking bottom falls out?
Right. Strongly against prematurely
which it did already.
Policy.
Pretty much.
We will stay the course.
I mean, the market went from being up 1% to being down.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment
now he's answering questions here.
Stability goals. Thank you. I will look forward to your questions.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You just talked about the importance of market conditions reflecting the policy restraint you put in place. Since the November meeting, the 10-year has declined by 60
All right, first question is a bullish question.
High yield credit spreads have come in. The economy's accelerated.
The acceptance above that 26 quarter.
6%.
6%.
Is this loosening of financial conditions a problem for the Fed in its effort and its fight against inflation? And if so, do you need to do something about that? And how would you do something about that? Thank you.
So as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%.
I think he's reading the script again.
In the past year,
this is pre-recorded.
Work through financial conditions, and those in turn affect economic.
He's looking down to answer these questions.
Inflation.
Yeah.
So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions. I would add that
Fed is doing all that we can do in order to combat inflation.
Persistent moves.
It says like the same shit over and over, just different ways.
Move financial conditions over time. I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes would be appropriate. And I would point you to the SEP again for our current assessment of what that peak level will be. As you will have seen, 19 people filled out.
All right, John. See you later.
The SEP this time, and 17 of those 19 wrote down a peak rate of 5% or more in the fives. So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows that, again, that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on what we know. Obviously, if the inflation data come in worse, that could move up, and it could move down if inflation data are softer.
Gina Smiley.
He's like, we're looking for a soft landing. How do I Hiroshima?
The SEP, like you mentioned, suggests that the Fed will be making another 3/4 percentage points worth
that sounds
of
about right.
increases
Yeah.
in 2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see the speed playing out going forward. And then I wonder what you're looking at as you determine when to stop.
Yeah. As I've been saying,
Watch the retest of this prior day low. A little bit of a buyer there.
As we lifted off and got into the course of the year, and we saw how strong inflation was and how persistent, it was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But I would say the most important question now is no longer the speed. So, and that applies to February as well. So I think we'll make the February decision based on the incoming data and where we see financial conditions, where we see the economy. And that'll be the key thing. But I mean, for that decision, but
back below that
ultimately, that question about how high to raise rates is going to be one that we make looking at our progress on inflation, looking at where financial conditions
Buyers stepped in originally at like 8,
and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move, and we've laid out our individual assessments of what we would need to do to get there. At a certain point, though, we'll get to that point, and then the question will be, how long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation is coming down in a sustained way, and we think that will be some time. Now, why do I say that? If you look at you can break inflation down into three sort of buckets. The first is goods inflation, and we see now, as we've been expecting really for a year and a half, that supply conditions would get better, and ultimately supply chains get fixed, and demand settles down.
Remember, there's kind of opportunity here on both sides, right? If you're playing the volatility, you can catch some nice little moves. I'm not going to just keep calling stuff out because it's just going to be crazy on both sides. But
then you go to housing services. We know
the real key thing that I am looking for is acceptance above that 45.
Continue to go up,
and that would kind of let us know that these longs that got trapped this morning are done. Then we've got excess.
They're going to be renewed into a market where rates are higher than they were when the original
probably return to value.
But we see that the new leases,
unless we hang out below this C2 low, build value down here, if we get accepted in this area, then you got to start targeting yesterday's VPOC.
The third piece, which is
and these poor lows,
55% of the index, PCE core inflation index, is non-housing related core services, and that's really a function of the labor market largely. That's the biggest cost by far in that sector is labor, and we do see a very, very strong labor market. One where we haven't seen much softening, where job growth is very high, where wages are very high, vacancies are quite elevated, and really there's an imbalance in the labor market between supply and demand. So that part of it, which is the biggest part, is likely to take a substantial period to get down. The goods inflation has turned pretty quickly now.
They're in the dry right now.
Turning at all for a year and a half.
Might be
now
done.
It seems to be turning. But
You can probably just put it in that bucket.
there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time.
Howard Schneider with Reuters. Thanks for taking the question. You described GDP growth in the SEPs as moderate or modest, I believe. Yet it's really approaching stall speed.
Right now you don't need it.
It's not much. You described labor market unemployment rate as representing some softening, but it's nearly a full percentage point rise, and that's well in excess of what has historically been associated with recession. Why wouldn't this be considered a recessionary projection by the Fed?
Well, I'll tell you what the projection is. I don't think it would qualify as a recession, though, because you've got positive growth. The expectations in the SEP are basically, as you said, which is we've got growth at a modest level, which is to say about a 0.5 percentage point. That's positive growth. It's slow growth. It's well below trend. It's not going to feel like a boom. It's going to feel like very slow growth, right? In that condition, labor market conditions are softening a bit. Unemployment does go up a bit. I would say that many analysts believe that the natural rate of unemployment is actually elevated at this moment. So it's not clear that those forecasts of inflation are really much above the natural rate of unemployment. We can never identify its location with great precision. But that 4.7% is still a strong labor market. If you look, you've got the reports we get from the field are that companies are very reluctant to lay people off, other than the tech companies, which is a story unto itself. Generally, companies want to hold on to the workers they have because it's been very, very hard to hire. So, and you've got all these vacancies out there, far in excess of the number of employed people. That doesn't sound like a labor market where a lot of people will need to be put out of work. So that there are channels through which the labor market can come back into balance with relatively modest increases in unemployment, we believe. None of that is guaranteed, but that is what their forecast reflects.
Thanks, Nick Timoros of the Wall Street Journal. Chair Powell, I want to follow up on Gina's question. The decision to step down the pace of rate rises appears to have been socialized at your last meeting, largely before the past two CPI reports showed inflation decelerating in line with the committee's forecast this year. You just now talked about making decisions meeting by meeting and being mindful of the lags of policy. Does that mean, all things equal, you would feel more comfortable?
I would consider that one look down at the low
by moving in 25 basis point increments, including
maybe even two looks down at the low and a fail really to get back below that 44 or 4,004.
What size rate hike to make at the last meeting. But what you said is broadly right, which is having moved so quickly and having now so much restraint that's still in the pipeline, we think that the appropriate thing to do now is to move to a slower pace. And that will allow us to feel our way and.
So now we know what he's doing.
He's such a.
Now we know what he's doing.
The risks that we face. So that's the idea. It makes a lot of sense. It seems to me. Particularly if you consider how far
he's like, listen, the people that are running Biden right now told me what I have to do.
It will depend on a variety of factors, including the incoming data in particular, the state of the economy, the state of financial conditions.
He just seems exhausted answering that question.
So would you consider that like a look below and fail now, Brad?
No, absolutely not. No,
I would just consider it like we've looked
like a
below
retest, right?
4,008 twice now and haven't been able to hold. So the next step is a break of that 40-26 and hold above and build value up there. We've got 8 minutes until the next period opens up. I'd like to see it open up above 26. If we get two periods opening up inside a prior day's range, oftentimes it can show acceptance, and that can lead to a test of value, which would be the break of that low.
Hi, Chair Powell, Rachel Siegel from the Washington
I'd really
Post.
like to see this next period open up above 26 and hold.
Projection for the unemployment rate. Why has the Fed raised its unemployment
if I'm
projection?
Get,
is it because the model suggests that a higher terminal rate would automatically cause a higher unemployment rate? Or are you seeing signs that the labor market isn't quite as strong as we think it is now?
No, it's not about the strength of the labor market. The labor market is clearly very strong. It is more just that, by now we've continually expected to make faster progress on inflation than we have ultimately. And that's why the peak rate for this year goes up between this meeting and the September meeting. You see the fact that we've made less progress than expected on inflation. So that's why that goes up. And that's why unemployment goes up, because we're having to tighten policy more. And so it didn't go up by much in the meeting, I don't think, but that's the idea, is slower progress on inflation, tighter policy, probably higher rates, probably held for longer, just to get to where the kind of restriction that you need to get inflation down to 2%.
In order to get to that number, how much of that could be caused by layoffs versus vacancies trimming or changes to the labor force population rate?
It's very hard to say.
I don't like this.
You can look at history, right? And history would say that
you just ask the
in
tough
a situation
questions
like this, the declines in unemployment would be more meaningful, I think, than what you see written down there. But why do we think that is the case? So I'll give you a few reasons. First, just is that there's this huge overhang of vacancies, meaning that vacancies can come down a fair amount, and we're hearing from many companies that they don't want to lay people off, so that they'll keep people because it's been so hard. I mean, I think it feels like we have a structural labor shortage out there, where there are 4 million fewer people, a little more than 4 million, who are in the workforce available to work than there's demand for workforce. So the fact that there's a strong labor market, means that companies will hold on to workers, and it means that it may take longer, but it also means that the costs in unemployment may be less. Again, that we're going to find out empirically, but I think that's a reasonably possible outcome, and you do hear many labor economists believe that it is. So we'll see, though.
Thank you. Colby Smith with the Financial Times. How should we interpret the higher core inflation forecast for 2023 in the SEP? Does that not then suggest that the policy rate currently forecasted for next year should actually be higher than the 5.1 medium estimate penciled in?
Well, I think that's why one of the reasons it went up was that core came in stronger this year. Yeah, what you see is our best estimate as of today, really, for how high we need to raise rates, to how much we need to tighten policy to create enough, restrictive policy to slow economic activity and soften the labor market and bring inflation down through those channels. That is the estimate, best estimate we make today. And as I mentioned, we'll make another estimate for the next SEP, and we'll, of course, between meetings we do the same thing, but we don't publish it.
Hi, Victoria Guida with Politico. I wanted to make sure I understand specifically what's going on in the SEP, because you all expect rates to go higher, but you're also more pessimistic about what inflation is going to look like next year. And I was just wondering, given that we have seen some cooling in inflation, is that primarily because of wage growth, that you expect wage growth to be sort of a headwind?
And we're going into next year with higher inflation than we had thought. Right, so we're actually moving down to the level that we're moving down to next year is still a very large drop in inflation from where inflation is running now, well more than a 1% change in inflation. But remember that the jump-off point at the beginning of the year is higher. So we're moving down still by a very large chunk. I don't think the policy's having any less effect. It's just starting from a higher level at the end of 2022. So we're getting down. I believe the median is 3.5%. That's a pretty significant drop in inflation. And where's it coming from? It's coming from the goods sector, clearly. By the middle of next year, we should begin to see
Municipal power hour? You mean new period?
Inflation.
Yeah, and power hours in 3 minutes as well.
Sector. And then,
I
the
just
big
figured
question is
you
how much will
probably
you see from the largest, the 55% of the index, which is the non-housing services sector. And, that's where you need to see. We believe you need to see a better balancing of supply and demand in the labor market, so that you have. It's not that we don't want wage increases. We want strong wage increases. We just want them to be at a level that's consistent with 2% inflation. Right now, if you factor in productivity estimates, standard productivity estimates, wages are running, well above what would be consistent with 2% inflation.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. Some of your colleagues have been pretty explicit that they can't imagine rate cuts happening in 2023. That's certainly not implied by the SEP. But futures markets have priced in some easing in the back half of next year. What's your view of the likelihood of any kind of rate cuts next year? What circumstances might make that plausible?
Our focus right now is really on moving our policy stance to one that is restrictive enough.
So let's see if he says anything about rate cuts here.
To our 2%.
If he
Does
says,
he get the questions beforehand?
And we think that we'll
probably,
have
because he's reading that answer.
Policy for some time.
Probably.
Experience cautions strongly against premature.
I mean, that's the only way he would be able to read that answer.
I guess
versus
I would say it this way: I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained.
But he has to be reading it off something.
That's the test.
Reading something.
And you're correct. There are not rate cuts.
Like stuff like that
in the SEP
like,
for 2000.
Well, that's off the cuff, but like that whole speech.
It's like he has like 20 pre-written statements that mean the exact same thing.
China,
or
he's put them in a thesaurus.
China has
or they have to. So he's like turning the page to the person who just asked the question.
Yeah.
I'm wondering if you see that as disinflationary.
I think he's got to be. You have to write all your questions and submit them beforehand, and then a bunch of people go and answer all the questions and put down all the words, and then give him the packet, and he walks up there and then
growth and for commodities prices.
And so you're right. Those two things will offset each other. Weaker output in China will push down on commodity prices, but it could interfere with supply chains ultimately. That could push inflation up in the West. It's very hard to say, how much how those two will offset each other, and it doesn't seem likely actually that the overall net effect would be material on us. But to your point, China faces a very challenging situation in reopening. We've seen waves of COVID all around the world can interfere with economic activity. China, a very critical manufacturing place for manufacturing and exporting. Their supply chain is very important. And China faces a reopening. They've backed away from their COVID restriction policies. There could be very significant increases in COVID, and we'll just have to see. It's a risky situation. But again, it doesn't seem like it's likely to have material overall effects on us.
Hi, Chris Rugaber at Associated Press. Thank you for taking my question. I wondered if you could comment a bit more about yesterday's inflation report. I mean, it showed inflation cooling in all three of the categories that you laid out at Brookings. Are you confident that you're seeing real progress on getting inflation under control? Are you still worried it could slip into some kind of unentrenched, upward spiral? Thank you.
Right. So the data that we've received.
You about ready to call it a day, Brad? Or are you going to try to leave a runner on?
We have some remaining data to get in November, but they clearly do show a welcome reduction in the monthly pace.
This is the equivalent of an 8-second ride, right?
In my opening statement, it will take substantially more evidence to give confidence that
the buck
inflation
and
is on a
Bronco
sustained downward path. So the way we think about this is this. This report is very much in line with what we've been expecting and hoping for. And what it does is it provides greater confidence in our forecast of declining inflation. As I mentioned, we've been forecasting significant declines in overall inflation and core inflation in the coming year. And this is the kind of reading that it will take to support that. So really this gives us greater confidence in our forecast rather than at this point changing our forecast. In terms of the
that's
pieces,
bullish.
We have been expecting
me.
Goods inflation to come down.
He's basically saying like that their forecast of 5% being the target
housing
is
services, as I mentioned,
here to
there
stay.
is good news in the pipeline as long as new housing leases show declining inflation. That will show up in the measure around the middle of next year, so that should help. And the big piece again is core services ex housing, which is very important, and we have a ways to go there. You do see some beginning signs there, but ultimately that's the big, that more than half, as I mentioned, of PCE core index, and it's very fundamentally about the labor market and wages. If you look at wages, look at the average hourly earnings number we got with the last payrolls report.
Are you still there, Brad?
You don't really
Yeah.
see much.
What number did
progress
you say you
in terms
wanted to
of
see it get above?
hourly earnings
It need to get above
coming down.
something.
Now,
I
there-
can't
there may
remember.
be
Oh, it's
composition
this.
effects
It's
and other
this
effects in
T2
that,
high.
so we don't put
Or
Oh,
the
okay.
26.
too
Yeah,
much
so it's popping up right
weight
above
on any
that
one
right now.
report. These things can be
So it
volatile
failed to
month
build
month.
value
We've
or
been
get
looking
acceptance
for
inside yesterday's
wages
range,
moving,
and
down
now
to
we're
more
building
normal
value
levels
here.
where
We are building
workers are
value
doing well,
lower,
and ultimately their
but
gains are not being eaten up by
compared to where we were just at,
Ooh,
right?
shit.
So
That's a good pop.
There was a pop.
There's a, excuse me, Michael
What's it
McKee
gonna
from
do
Bloomberg
here?
Radio and Television.
There's
There's a little
some
bit of a
strong
disconnect
selling
between the
up to
optimistic
45
view
is the
just
target here,
expressed
remember.
about the economy and the changes that you've made
Almost there.
in the SEP. And I'm wondering if you're reacting to the fact that the markets have
This is it for
loosened
me. You
financial
guys have a good day.
conditions,
I'm gonna get off
or if you
before I do
feel the
something
Fed
stupid
may
because
be
I
a
really
little
want
bit
to trade,
behind
but it's
on
going too crazy for me.
inflation, whether
Later,
I
Dom.
feel ya. Later.
Hey, you
this
guys have a great one.
inflation we're seeing is transitory or not, and how this affects the idea of a soft landing if you're projecting just 0.5% growth for this year.
So, if I think I got your question. So, one thing is to say is I think our policies end up getting into a pretty good place now. We're restrictive, and I think we're getting close to that level of sufficient. We think sufficiently restrictive. We laid out today what our best estimates are to get there, it boils down to how long do we think this process is going to take. And of course, we welcome these better inflation reports for the last 2 months. They're very welcome, but I think we're realistic about the broader project. So that's all. That's the point I would make. It's, we see goods prices coming down. We understand what will happen with housing services, but the big story will really be the rest of it, and there's not much progress there, and that's going to take some time. I think my view and my colleagues' view is that this will take some time. We'll have to hold policy at a restrictive level for a sustained period, so that two good monthly reports are very welcome. Of course, they're very welcome, but I think we need to be honest with ourselves that there's inflation. 12-month core inflation is 6% CPI. That's 3 times our 2% target. Now, it's good to see progress, but let's just understand we have a long ways to go to get back to price stability.
Well, do you think the soft landing is no longer achievable?
No, I wouldn't say that. No, I don't say that.
Oh.
I mean, I would say this.
Did you say the soft landing's out of the question? He said, I wouldn't say that.
We need to keep rates higher,
Uh-oh.
keep them there for longer, and inflation, moves up higher and higher. I think that narrows the runway, but lower inflation rates
Brad's definitely being the hammer right now, huh?
could certainly make it more possible.
He's like, oh, now?
Isn't a 0.5% increase an actual? I mean, that's a soft landing as opposed to a decrease, right?
A deep one or not? It's
I'm not misunderstanding that, am I?
Certainly.
What do you mean?
Well, I mean, a soft landing would be, or a hard landing would be where you
would increase the likelihood.
The GDP decreases or whatever happens to bring that number down. But a soft landing, I mean, 0.5%, not necessarily anything to write home about, but that's definitely not
expected
negative.
So
it feels like more of a soft landing than it would if it was a negative number.
Well, that's the thing. It's like he's having the ability, because inflation came off of it a bit. He is only going to do a 0.5 point basis point rate hike instead of doing a 3/4 point. So that's why he's saying, like, he said that he sees 5 being the target rate and doesn't see a need to raise it. So now basically the market just is going to chop up to 4,200 until January 18th.
So that the ultimate cost of getting it out of the economy would be very high in terms of
I think
employment, meaning very high unemployment for extended periods of time, the kind of thing that had to happen when inflation really got out of control, and the Fed didn't respond aggressively enough or soon enough in a prior episode, 50 years ago. So that's really the worst pain would be if we failed to act. What we're doing now is, it's raising interest rates for people, and so people are paying higher rates on mortgages and that kind of thing. There will be some softening in labor market conditions, and I wish there were a completely painless way.
Well, that's not very bullish right there.
Restore price stability. There
It's
isn't.
Some of you may die.
We can do.
Yeah.
I think so that
Some of you will be eating at soup
pretty
kitchens.
confident, it seems to me, that we will get inflation under control, and I believe we will. We're certainly highly committed to do that.
He believes.
Some of you
Grady Trimble
may
with Fox
die.
Business. You've reiterated today, and the committee has reiterated its commitment to that 2% inflation target. I wonder, is there ever a point where you actually reevaluate that target and maybe increase your inflation target if it is stickier than even you think it is?
That's just so changing our inflation goal is just something we're not thinking about. It's not something we're not going to think about. We have a 2% inflation goal, and we'll use our tools to get inflation back to 2%. I think this isn't the time to be thinking about that. I mean, there may be a longer run project at some point.
He's like, enough with the tough question.
That is not where we are. We're not considering that. We're not going to consider that.
He's starting to sit back. You see his shoulders kind of relaxing.
He looks at him and goes, "That's a little fucked up, Paul. That's not what you said you were going to ask." You're a real piece of
Freaking
shit.
calling me out on national TV. What the hell is wrong with you?
You're a real piece of shit.
As
He just
you
falls back
monitor
to
wage
his
growth and
normal
unemployment
speech.
data, I wonder if you're paying close attention to a sector or even income level. Like, how do you factor potential exacerbations of inequality into your risk calculations, especially given the K-shaped recovery of 2020?
So the
A-shaped recovery.
I would go back
What the
to
fuck?
the labor market that we had in 2018,
That's probably a
19, 20.
a financial term.
So what that looked like was
K stands for
wage
kick-ass.
increases.
That's the
for
dumbest shit
people at the
I've ever
lowest
heard.
end of the income spectrum were the largest.
K-shaped recovery.
The gaps between racial groups and gender groups were at their smallest in recorded
Who's
history.
this bit?
For real,
all of that because of a tight labor market. A tight labor market which had inflation running, just a tick below 2%, and the economy growing right at its potential. So that seems like something that would be really good for the economy and for the country if we can get back to that. And so that's what all of us want to do. We want to get back to a long expansion where the labor market can remain strong over an extended
This is from
period of
COVID.
time. That's a really good
I
thing.
was like, listen, all my buddies had
workers
yacht
and
payments
the
coming
economy,
this
and
week.
we'd
So,
love to get back to that.
I
That's
told
what
them
our
when to
goal is.
sell up at 92,
there's
and
in the near
they bought it
term,
again at 4,000.
we have to use our tools to restore price stability, but we can't. What we have to think about is the medium and longer term. If you think about it, the
What's that?
country went through a difficult time. I think,
After
much more difficult
after I'm
than
done trading, I'll
I can
see them
think
off.
what
Okay.
happened here, but it really set up our economy for several decades of prosperity. So price stability is something that really pays dividends for the benefit
Damn,
of
there's
the
like
economy and
there's a
people
little
in it.
seller's wall
So
right
over
there
a
that
very,
they're
very long
struggling
period
with
of time.
so far,
So
Brad.
when it is lost for whatever reason,
Where at, Jared?
it has to be restored.
Let me
as
zoom in
quickly as
more.
possible,
I just
which is
zoomed
what we're
out.
doing.
Right at that like 48, dude, 47, 48. But
Yeah, we're in single prints right here. That's why.
We
yeah,
do. Yes, we absolutely.
The VWAP's
do.
right above.
We look at it's
Never
our
mind.
regular
3.
practice to talk about unemployment rates by different groups, including racial groups and that sort of thing. We do. We keep our eye on it.
it's not a buy and go with. Don't do it.
Nancy Marshall-Genzer with Marketplace. What would you do if the economy slows so much that we enter a recession before we see strong,
At the weekly
consistent
VWAP right here,
signs that
51,
inflation
and
is
the
slowing?
24-hour
In other
VWAP
words,
is at
stagflation.
56.
So I don't want to get into too many hypotheticals,
You what?
but
Holy
it's
shnikens.
hard to deal with hypotheticals.
Yes, now we're going to 4,000. Good.
We have
Bye.
to use our tools to support maximum
come
You
on.
mean 4,100?
stability.
4,100. That's what I mean.
I
Like
made it
4,100.
clear that right now the labor market's very, very strong. You're at near a 50-year
You
low.
really think so, huh, Brad?
You're at or above maximum employment.
I mean, I can.
50-year low in unemployment. Vacancies are very high. Nominal wages are very high. So the labor market is very, very strong. Where we're missing is on the inflation side, and we're missing by a lot on the inflation side. So that means we need to really focus on getting inflation under control, and that's what we'll do. I think as the economy heals,
Now, Powell just tried to
two-
taper it
two
off a
goals
little bit.
come
Someone's
more
in his
into-
ear, like, yo, you're going a little bit too fast and hard. Chill it out.
But right
We want to be
now-
able to buy this before it goes up too high. So relax a bit.
I'm not even getting filled right now.
Thank you, Chairman Powell.
Oh
Greg
my
Robb
God,
from
dude, this
Market
is
Watch.
crazy.
You spoke a little bit ago. You said that the U.S. it looks like we have a structural labor shortage in the economy. Could you expand on that? Talk a little bit more about that. And really, are you talking about getting Congress action on increasing
Oh
like
my
legal
gosh, this was the
immigration,
easiest
things
trade in
like
the
that?
whole world.
Thank you.
So what I meant by that, the structural labor shortage,
Just had to wait
is
for it.
if you look at where we are now, as I mentioned, if you just look at demand for labor, you can look at vacancies plus people who are actually working, and then you can take supply of labor by are you in the labor market, are you looking for a job or have a job, and you're more than 4 million people.
It's got to hit 80. 80 is where my target's at. That's where I could see us kind of tapering off. We're getting a pretty decent pullback off the high, but the volatility is just kind of chaotic, so kind of expect that.
The labor market is actually, it's 3.5 million people at least smaller than it should have been based on pre-pandemic, just assume population and reasonable growth and aging of the population. Our labor force should be 3.5 million more than it is, and that there are lots of easy ways to get to bigger numbers than that if you go back a few more years. So why is that? Part of it is just accelerated retirements. People dropped out and aren't coming back at a higher rate than expected. Part of it is that we lost 500,000 people who would have been close to 500,000 who would have been working who died from COVID. And part of it is that migration has been lower. We don't prescribe, it's not our job to prescribe things, but I think if you ask businesses, pretty much everybody you talk to says there aren't enough people. We need more people. So I tried to identify that in a speech I gave a month ago, but I stopped short of telling Congress what to do because they gave us a job, and we need to do that job.
Back to the VWAP. This is where that impulse was from.
Chair Powell.
The second
Jennifer
impulse.
Schonberger with Yahoo Finance. You say you expect growth of just 0.5% next year. Given that you've said the process of raising rates and getting inflation back under control will be painful, have you had discussions within the committee and addressed how long and or how deep of a recession you would be willing to accept?
Dude, I think it's done, bro.
What we do is we make.
You think it's done going up?
Forecasts.
Yeah.
Yeah.
And we publish them.
That's what
quarterly.
you think?
And
yeah.
If you look at those forecasts, those are forecasts for slow growth.
Unfortunately,
for a softening labor market, by which I mean
can't all be
employment
right.
goes up, but not a great deal. And you see inflation coming down. You see rates going up a lot. You see inflation coming down. Those are those.
Just trying to help you see a different perspective. That's all.
We're not. We all
do the right thing. Get out while you're out.
We don't talk about this kind of a recession and that kind of a recession. We make those forecasts. The staff runs, and you will see this if you look at the old Teal books, runs alternative simulations of all different kinds at every meeting, and we look at those too. And those will explore different things. But that's just upside and downside scenarios. Of course, that's responsible practice that we've carried on for many decades. But no, we don't. We haven't asked ourselves.
Back to the VWAP. Let's see if it holds the VWAP.
Hi, Jean Young with Market News. I wanted to ask about the SEP again. If you are reaching peak rates around 5% in the first half of next year and inflation starts to decline materially, that would seem to make the real rate gradually more restrictive. Is that something that's built into the projections and into models? Is that something you would want to see?
So we do know that, of course. That's something that we know and we'd see. But as I mentioned, we wouldn't. I wouldn't see the committee cutting rates until we're confident that inflation is moving down in a sustained way. That would be my test. I don't see us as having a really clear and precise understanding of
fall
what
from
the
72 to
rate is and
48.
what real rates are,
Well,
so
the
that
volatility
it would mechanically happen like that. It would it'll be a test of for cutting rates. I think in the event it'll be a question of do we actually feel confident that inflation is coming down in a sustained way. Thank you very much.
Liquidation, now that he's gone. So let's see what we get here.
I told you that was the top.
M period coming up, LM. The last period of the day. I wonder if we'll end on a spike or we'll finish inside. Remember, balance today is just overlapping so far. This is where the lower impulse was at 45. NASDAQ is back down below its VWAP. What do we have? 10 minutes until M period opens up. Back to the VWAP. Pretty, pretty slow now all of a sudden. A lot of volume kind of forming here right below the Globex low. Right at the half back. Break above the settle again is bullish. Tick is coming up here. It's bounced off of a pretty decent low. 80 is still the target. Like 80 needs to get tested because that's going to determine if this is real selling or not. 80, 82, that's where the seller was at. All day we identified him there. So I assume that if it comes back up to that area, that seller will either show up or not. But if they don't, then the target becomes that 4100. If they do, that could be an area where you see a bit more selling. We're pretty far away from
Yeah,
that.
yeah, but after all of that, dude, I bet you, I mean, maybe his levels changed. You know what I mean? Because you know he took profit.
Well, not if he's a longer term trader. If he's a longer term trader, he's waiting up there to sell more when it gets up there. Because he likes that area. Yeah, he might have taken profit, but he's still going to wait up there to sell because he likes that area to sell. Like if you sell t-shirts for $82 and they sell out once the supply once the demand gets back up to your levels, then you sell those t-shirts again. But there's no reason for you when you just sold t-shirts at $82 yesterday to come in today and sell them for half that price. 46 bucks, $42. We got 6 minutes. Like if we just pay attention to value is overlapping. It's not lower. It's not, the point of control is higher. We have good excess on the low. It's kind of a mechanical low off yesterday's halfback, but like I said, when we're moving in a trend like that, a pullback to the previous day's halfback seems like a good buying spot for a lot of people. And then, yeah, well, we do have excess on the high as well, but just
I
not.
feel like it's going to try and get back
great
to those
excess.
TPOs, all those TPOs in a row. Yeah. Well, just a lot, that's a lot of TPOs for it. I mean, I know that it's got a lot of range in there, but with all those TPOs in a row, I just feel like that's the area that it's trying to target. Now, whether or not it makes it there is another story.
Only thing that you really have to wait for is just for the market to get back above the settle again. Once it gets back above the settle and look to get long, then straight up to those TPOs.
Are you gonna game at 1, Brad?
No, because we're gonna go get a Christmas tree. I'll just game tonight though when I get back.
Oh, okay. Well, I'm gonna call it a day. I'm gonna hop off.
All right, well, I'll catch you later.
All right, guys. You guys have a good one.
Breaking trend here. Close to it at least. Still inside yesterday's range. Looking below value. M period opens up in 4 minutes. And I don't really trade the last 30 minutes of the day, so if you guys are trading these last 30 minutes, like, be careful. We kind of have a double distribution day today. You consider like that A low to be the start of the upper distribution, this JL level to be kind of the single prince in between the distributions, and then that K high, the start of a lower distribution. I'll be right back. Gaining a little steam on the downside here. Right at the 200 SMA. It's at like 26. Right at the previous day's low. One minute until M period opens up. Look at the tick. Tick's at 1364. So M period opens up, immediately starts shoving lower into the previous day's range. Basically selling right off the 200 SMA. Still pressing lower. The tick is pinned at the low. Well, it was pinned at the low and it's kind of bouncing there, but market's moving lower as the tick is moving higher, which is kind of weird. But look at the breadth. Look at the market overall, just really kind of selling off. But for some reason, we're not making a new low, so it's kind of interesting. Kind of an interesting look to close out the day here. I'm not trading any of this right here, but you know, it's just I do like to watch the close most days. even if the market doesn't like, you know, rally all the way up to 4100, a close down here, or even if the market doesn't break the low, even a close down here is still bad for, it's still kind of a bearish indication or a sign of weakness. Oh, excuse me. Oh, geez. All right, guys. Well, it seems like the end of the market's probably just gonna, you know, dazzle around here. If it closes below this low, that's kind of a bearish sign. If it closes above the low, it's not that great, but really you just want to watch this K high. That's going to be the break of a distribution. If it does close, or if it does, you know, kind of rally up above that within the last 25 minutes here, you could see some more short covering, and you know, they'll look to target probably the settle that 55. But other than that, you know, make sure that you guys are managing risk and sticking to your trade plan. Thanks everybody for hanging out all day, and I will catch you all later.